Monerotopia, a show for the Monero community where all are welcome to join. From noob to maxi, no matter what bags you hold. Just sit back and relax to the sweet sounds of Monero's latest progress. Or if you're feeling inspired, join us on stage. Remember, the only thing that can stop Monero is a false belief that it can be stopped. And if you want to win the revolution faster, we recommend you remove your XMR from all custodial exchanges immediately. Warning, voting accidents are common around here. Don't forget to properly secure your private keys. Monerotopia starts now.
Righty. All right. I was muted. What's up, man? Good morning.
What's up? Good morning. Good morning, everyone.
How you doing?
Doing all right. It's been a crazy week so far.
Crazy week, man. This
Insane.
I think this is the worst assault thus far, right? I mean, other than the Monero delistings, the attacks we've seen on other privacy tech such as Tornado Cash.
Yep, that
I'd
one
say this
definitely
is
comes
the worst all time week for privacy tech and crypto.
Oh yeah, for sure.
Yeah. All right, so huge show today. Obviously, we're going to be talking about Samourai Wallet, and then a couple of other things that popped up. It hasn't just been Samourai Wallet, as if that isn't enough. Phoenix Wallet, I believe, has also. I'm getting a little bit of echo. Phoenix Wallet has also dropped their services in the U.S. I believe this morning I just saw Wasabi Wallet drop their services in the U.S.
Yep, they both are pulling out the U.S. market, potentially irrationally, but at the same time, the whole MSB, the requirement for MSB is now considered to be like up in the air. Like before, it was already hard enough to understand, like who needed a money transmitter license, or sorry, an MTL. It was already hard enough, and now, due to Samourai being taken down, people are re-questioning that. And it's very possible that they're purposefully trying to kind of stretch this existing regulation to now mean something different compared to what it was before.
Very possible indeed. It's what they do best. And then we saw the feds put out a warning to everyday citizens, warning them not to use services that are unlicensed and unregistered, which is, quite ironic because they're also not, providing enough detail to the companies as to whether or not they actually need to be registered. It's purposely been left as a gray area, and now they're taking advantage of that. So yeah, huge show today. We have Seth that's going to come up during the viewers on stage session. We have Francisco Cabanas, aka ArticMine. He's going to be joining us. And we have Mike Hassard, who's going to be joining us as well. He's of the law firm Tor. He's going to be joining us as well, giving his legal opinion on what's going on. But first, we are going to kind of stick to the normal schedule, mostly because a lot of these people aren't available till 12 noon. So we're going to hold off till 12. Stick around. We have a lot in store before then. As always, we're going to do the price report. I think we'll quickly run through some news just to kind of set the stage of everything that's going on. And then we'll bring up the guests. And then we'll bring up viewers on stage, anybody that wants to participate with us and the guests in the discussions that are going on. So that's what we got going on. A little housekeeping. Obviously, MoneroCon's coming up June 8th. Check that out. If you haven't bought your ticket already, now's the time to do it. If you're looking to attend, go ahead and do that. We will most likely be there if all goes well on our end. We haven't missed a MoneroCon yet. And Monerotopia coming up in November, so definitely check that as well. If you're interested in grabbing a VIP ticket, now is the time because those prices will eventually start going up. And we appreciate anybody who's an early adopter of the conference. It just gives it momentum. But I don't need to go into more details on that. We could save all that for another day. Let's kick off with the normal show. Let's bring Bawdy up here and do the price report.
All right, let's do
Let's
it.
do it.
The Monerotopia Price Report segment is sponsored by Local Monero. Avoid using KYC exchanges. Buy and sell Monero directly for fiat, peer-to-peer.
Hello.
Bawdy,
Hey,
what's
buddy.
going on?
Oh, just sorry, excuse me. I just drank some coffee and didn't do it right. Yeah, just watching all the news, man, watching all the craziness go down.
Crazy. It's like one hit after the next, right?
What's weird is that like we've kind of been talking about this for years. We've said, man, these are real problems with mixing. These are real problems just in general with creating an ecosystem that's based on intermediaries and third parties and whatnot. Even if custody isn't involved, the fact that profit is involved just seems to be like a carte blanche for these scumbags in government to come and find a way to attack you. So it's kind of, it's almost surreal watching it happen because, you know, we've talked about it, but when you know, it's actually starting to happen, it's kind of like, fuck. You start to realize, you know, there could be a lot of other problems that could be popping up that are difficult for us as well. Not that we haven't already experienced them with the delistings and whatnot, but
Yeah, I mean, the Samourai wallet thing is pretty shocking, but I think even more shocking is in terms of like, wow, I can't believe that's actually happening. The Lightning wallets, you know, Lightning attack on Lightning that we're seeing, right? With Phoenix no longer offering services, with this fear that, you know, Lightning nodes may be considered money transmitters as well. I mean, once again, these are things we've talked about, especially in Monero land. We put out these warnings, but to start to see them come to pass is shocking.
I'll be really excited to hear what Mike has to say from the Tor law firm about like how liberally can they stretch the scribbles regarding the legislative scribbles regarding money transmitters. I took a brief look at it earlier this week, and it seemed to me like that it involves custody. Like money transmission should involve custody, and money service businesses involve some kind of transfer custody. But you know, I'm just a pleb, and I'm sure there's a lot more scribbles to read on that. So perhaps Mike can hopefully he can illuminate us on at least like what's the paradigm, the logic of the government, what kind of things are they going to bring to court. You know, and like for guys out there, like you should definitely 100% try to understand your opponent's argument, and then you should try to understand it better than they do, because that's your ability to defeat it.
I mean, with Lightning, like LSPs do move liquidity around. They provide you with liquidity. So like Breeze, well, they have a different company they use for liquidity. Phoenix Wallet, they are their own LSP, so they provide liquidity themselves. I'm not sure about Wasabi Wallet. Some people don't even do Lightning or just regular Bitcoin with a mixer.
I mean, our whole thesis all along, those in Monero that really understand it, has been that this stuff needs to be all built into the base layer. It needs to be just, you know, a true open source protocol, all the privacy built into the base layer, that there can't be these tools that are used outside to obfuscate things, because then they will be viewed as tools for those purposes. Things need to be default private, and it needs to be considered a utility for transmitting money, not a utility for washing money. And that's kind of been the thesis all along as to why Monero is important, because it does all these things on the base layer, and it's coming to pass. And not to, you know, sound like we don't want to sound like I told you so, but I mean, it's very much been the thesis. And, you know, the law, why we're saying it is unclear, it is quite clear in other ways, and that's why, you know, Monero does the things it does. So we'll get into all of that more, but I think you know that meme needs to get out there more now. This realization, this larger realization as to this is why we Monero. This is why we moved away from Bitcoin. This is why, I mean, I'm not speaking for everybody here. This is why I don't use Bitcoin privacy tools. This is why I use Monero. It's default private. It's a utility for transacting value. It's not owned or controlled by any person or corporation. Nobody's profiting from the use of it. There is no dev tax. It's like, the protocols that run the internet itself. And so if there's going to be an attack on that, then there's an extreme blatant attack on free speech itself. Then at that point, you're saying, code is not speech. At that point, if you're attacking Monero on that level, and you're saying, we're banning Monero because it's being used for money laundering, at that point, you also have to ban Bitcoin. Or at that point, you're talking about banning encryption itself. I mean, Monero is aligned with these basic tenets, and that's where the ultimate battle is going to be take place. And if we lose that battle, then America has essentially lost the battle in terms of what liberty is in this country, and the tenets that this country was founded upon, the Constitution. We could go into all of that, but that's really what it's going to come down to: can Monero legally be banned in the U.S.? And I personally don't think it can be. And if it can be, then the U.S. is no longer anything close to what it was supposed to be.
Well, I think that's already true today, but
I'll save some of my more sort of in the weeds questions, because I feel like with the way that they're going about trying to define money transmitter, you could define a node, anyone running a node, any miner, maybe not a node necessarily, but at least a miner. You could define any miner, any mining pool, any hasher as a money transmitter, like with as liberally as they're going. But I'll save that question for when we get the legal expert up on stage.
We could get into that. I mean, I think perhaps an LN node is more arguably a money transmitter than a miner, right? I think you would agree to that.
I might not. In terms of qualitatively, I may or may not. But I mean, we can flesh that out later.
Yeah, which is
the weeds here.
Right, and then that gets all into why random access is so important, why CPU mining is so important, because at that point, what are they banning? They're banning the use of a computer. All these things. But my overall arching point
they're trying to ban math right now. They're trying to ban matrix algebra. Certain forms of matrix algebra will become illegal. Not really, but that's effectively AI, right? That's what AI is. The simulation of these neural networks is all done with matrices and with, complex math, but it's just math. And the government's sitting here talking about how do we regulate it? How do we stop it? So we know what they want to do. We know the kind of mentality that these people have, which makes it even more incumbent that your protocol can survive these kinds of attacks. And I think Monero really has the best chance of everything that we've seen so far, has the best chance to be able to survive these kinds of attacks, both from a legal perspective, and also from a network perspective.
Exactly.
I think it's very telling that how did they attack Monero? They are sort of covertly behind the scenes talking to exchanges and trying to get them to delist it. But how are they attacking Bitcoin and the other ones? Well, they took Tornado Cash to court. They arrested the guys that had some like centralized focus point into the operation of that functionality. And even though it was just a peripheral functionality and not part of the core Tornado Cash functionality, same thing with Samourai. We noticed that Wasabi, they forced them to. We say forced. Maybe they're feds, secretly feds honeypot. Maybe they're for real, right? How could we know? But we do know that Wasabi does cooperate with chain analysis and does, at least on their front end, they block bad boys. They block bad UTXOs. So I think it's very telling that they're doing the open upfront legal attacks on the points that they can, that are the most centralized, but they're not doing that with Monero. They've never even hardly mentioned trying to come after Monero in a direct legal assault. They're doing it in their little slimy back end ways by trying to force the corporations and force their hand to delist. So I think that's very telling. So maybe we can go ahead and get into price if you guys would like.
Yeah, let's go ahead and get into price. Everybody's listening now. Please like and share. Let's get the word out. Let's try to get as many viewers as we can for the upcoming conversation that we'll be having at around 12 noon when we bring on all today's special guests. obviously with Bawdy and Tux and myself included. So yeah, go ahead, Bawdy, take it away, and we'll be bringing up the special guest in about 40 minutes from now.
I love how we can tell that everyone here is watching on like Freedom platforms, because we've got 72 watching and we've only got 9 likes. So that probably means that people are tuning in through NewPipe and other methods. So fuck yeah, guys. Right on. Okay. Sitting here. We'll get rid of the volume for a second. On the near term, since like February, you can see, so this big red candle was obviously when they delisted Monero from Binance, and swing traders or speculators are going to do what they do. And since then, we've kind of been in this holding pattern, just sort of a sideways triangle, it looks like. In terms of the volume, one thing, this is the Kraken price, by the way. One thing I noticed that's interesting here is that the volume shot up immediately on that delisting. And you'll notice that Kraken volume has actually stayed pretty high since then. And that looks a little bit different than the other volumes that we've seen from other exchanges. So let's see here. I don't know why it's not saying which is which. Okay, whatever. Last night it was actually showing which exchanges. Here we go, Qcoin. All right, so this chart is Qcoin. You'll notice that, yeah, their volume shot up, but then it's kind of trailed off. Same thing with MEXC. So MEXC is kind of like an up-and-comer. Be very careful. Don't trust them. They could very well freeze your funds, and they have, and they'll hold them hostage for KYC. Something Binance has done back in the day as well. So, but you'll notice also, so again, these vertical white lines right here, that's where that's where the delisting happened. So the first white line is the announcement, and then the second white line is where Binance actually delisted, that actually took place. So again, you'll notice that, yeah, there was some volume for a couple days on MEXC, but then that came back down. This is actually Kraken right here. I just wanted to show that there for reference. CoinEx, again, another kind of a new exchange here. They haven't been doing any volume. In fact, their volume has been dropping off. It does look like Bitfinex. I trust Bitfinex least of all, but it does look like Bitfinex. I don't know how that line got over there. This should be right here. It does look like Bitfinex volume has allegedly come up some. Probably some of the inside cabal in crypto does need Monero, and they need a way to get to it. For all we know, maybe this is how the government covertly sells their Monero. I don't know. Just kidding. And then last one, we've got also CoinEx, but this is USDC volume relative to Monero. So again, it's fallen off. So the only exchange after the Binance delisting that has continued to have high volume would be Kraken, and that's come up, and it's basically stayed fairly high for the entire time since then. So I just thought that was interesting. I do regard Kraken as being more likely to have correct volume, or not inflated, not wash traded volume. Probably they still have some, but I think that their volume reporting is probably more honest. But even so, even if, like, you would think if these guys were going to lie about their volume, that they would have just like wash traded themselves higher and be like, hey, look, we're the new Monero exchange. Anyways, one thing that I think this is potentially a sign of, the fact that we don't have a whole lot of volume being reported by these other exchanges, is that people are probably actually moving to other solutions, right? They're actually moving to decentralized solutions. And we're starting to see quite a few of them pop up. So it doesn't matter if let me rephrase. It does matter if they delist Monero from centralized exchanges, but they're almost kind of doing us a favor, guys. They're telling you that you need to be using these things in a way that's censorship resistant, that's decentralized, and much more difficult to attack from a legal. So one thing we can also take a look at, we always look at here, is the price divergences. So this is relative to Kraken. And the reason that we do this is because Kraken has never shown signs to us that they have fractionally reserved Monero. They've never shut down withdrawals for longer than basically an hour, whereas pretty much almost every single other exchange out there has shut down Monero for days at a time, particularly during the most suspect moments and during the highest price divergences. So they'll shut down their exchanges, and then they'll diverge their price significantly. So Kraken is the only one that didn't do that. And it seems like, they're a little bit more regulated. They're the only major US exchange that does a lot of volume, and really global exchange that does a lot of volumes, that lists Monero directly for fiat, not for USDT, not for Tether, right? Not for USDC, directly for US dollars. And so, because of sort of the totality over a few years of investigation that we've done just sort of independently, it does seem like Kraken has been more honest and more reliable than the other exchanges. And so we compare we compare these guys' prices against Kraken, because again, when they shut down their withdrawals, when they freeze their withdrawals for days and sometimes weeks at a time, they diverge their prices below Kraken, and they even exchanges that aren't frozen will diverge their prices down to match the frozen exchanges, while Kraken price stays higher, which is just extremely suspect, because you shouldn't have those kinds of price mismatches. You should be able to, that should be arbitrated very quickly by bots, actually. But if withdrawals are shut down, that arbitration can't happen, right? So you basically you buy coin on the lower listed exchange, and then you sell it on the higher listed exchange, and that forces the price to equalize. But if exchanges are frozen, that price cannot equalize. And so this is why we look at the price divergences. And so I say all that really to just show you here that actually over the past week or so, pretty much everything is back at the 0 point. Even Poloniex, and Poloniex, as we can see back here, has had significant vacillation up to the tune of -9% since, going back for quite a long time, actually, for the month of March, obviously. This chart is interesting. You'll notice that we're on a 15-minute chart here. It kind of just has to be that way because these guys try to hide their misdeeds in the noise. So they don't always necessarily keep their prices diverged. What they'll do is they'll keep them mostly diverged, but then they'll swing it a lot. So you take the moving average so that you can see what they're actually doing. And so to do that, you need a fine resolution, which is why we're on the 15-minute chart here instead of something like a 2-hour or 1-day chart. The simple fact is TradingView doesn't provide us the data that we need to go back, let's just say 20,000 seconds, right? Because if we looked on the second by second chart, that's real to look at. Anyways, kind of a long way of just saying right now it looks like the price divergences are actually not really present. They're very small. This is basically noise, like -0.2% to +0.2%. You wouldn't say that's anything suspicious to point your finger at. All right, so we'll take a look here at the XMR BTC chart. And again, so basically for the month of April, for the last 2 weeks, I think last time we talked was about 10 days ago. Price relative to Bitcoin has kind of just been oscillating here. You'll notice all these colorful lines that are drawn on the chart. These are all standard deviations. The blue lines are upper standard deviations. The orange lines are lower standard deviations. And this is just overlaid of multiple time frames. So we're looking at like the 10-day, the 15-day, the 20, 50, 60, 100, 200, 500, 1,000, 2,000, 3,000, etc. Time frames, right? So they're all just overlaid on top of each other. Just consider them to be standard deviations in sort of like a macro picture view here. And then if you can see like these light white lines, these are moving averages. And we'll talk a little bit more about this later, potentially. But the point of this chart is basically that right now nothing really is happening here with the XMR BTC price. We're basically oscillating. I do like on the short time horizons how price does seem to be establishing here into these lower standard deviations. So that very well could be a sign that this is actually the bottom. We've been talking here for maybe about the last, we'll just say a month, maybe month and a half, that overall, like, yeah, this delisting and obviously Bitcoin pumped pretty hard with the ETFs. And then, we've got the halving hype and all that stuff. So, and then we had the delisting. So our relative price has significantly gone down, which is unfortunate, right? Because Monero is the thing that's protecting people, for example, in austere environments like the darknet markets. Monero replaced Bitcoin in darknet markets, and that's no small feat. Like you really like it's hard to overstate how significant that really is. The fact, like, for something to unseat the number one coin means that there must be something there, right? There's something important happening there, and of course, it's privacy. It's the ability for Monero to protect your privacy, fungibility, so that every coin looks like every other coin. And so, anyways, it's unfortunate to have watched this drop off happen here. But that doesn't stop Monero from working, and obviously we just keep on using it. And the other thing too to keep in mind is that Monero's price, the price that we have, has been built on organic adoption. It's not been built on hype. It's not been built on narratives or asking the government to integrate our price into their financial system. This is built on the basis of real people actually using this thing for real use cases, and that's a lot more than can be said for almost any other coin. There are a few other coins out there, sure, that are also used for payments as well. Even some OG coins. But most of this crap out there, most of this garbage that outperforms Bitcoin even, isn't used for jack or for shit. And we've got Monero here that is actually used and actually has demand. And unfortunately, just is not experiencing as much price performance as all of us Moonboy NGU convert evangelists would prefer. Just kidding. We've since learned.
Did we see any increase in volume or anything after the Samourai news and some of these other stories that broke this week, or it was just like no reaction at all?
Let's go to a shorter time frame here. Take a look at volume. No, I mean it doesn't look like it. From the US dollar price, it doesn't look like we had any major. So this is the 4-hour chart. So the Samourai news would have dropped right around here, I suppose. So we got maybe it's just the tiniest little bump in volume right there, maybe the tiniest little bump in price. But I mean, I don't think we could really say that.
That is a little crazy to me, right? I mean, what's your take on that? Obviously, I think we've become numb around here in Monero land, where we're just like, oh, okay, the price didn't move. But if you take yourself out of it for a minute and you look at it, it's like it's a little shocking that there was like no reaction whatsoever. I mean, we got this news that dropped that basically said, privacy tools in Bitcoin may not be around much longer in the eyes of the federal government. You might want to start looking at something like Monero, which is basically your private. And there was like zero response in the market.
I don't think it would be too surprising, to be honest. The people that were using Samourai are well aware of Monero, and it seems like the people in the Bitcoin community that didn't like Monero, they also hated Samourai, and none of those guys would have ever used Samourai anyways. They were all using Wasabi, or they probably just weren't using Wasabi, or they were probably using Lightning Network custodially and thinking they were being private or something like that. I don't know. Yeah, that's being a bit cheeky, but that's just what I see out there when I talk to people on Twitter.
And I guess the overall analysis that, okay, this might mean that Bitcoin never becomes private or never has tools that make it private. If anything, that just plays more into the number go up, where people are like, oh, okay, this is actually better for Bitcoin.
Yeah, they seem to be somewhat of a minority in the Bitcoin ecosystem community. I kind of see them. What I see is a lot of gray area, actually. I see people that don't want to go obviously compromise their values that deeply to be like, yay, KYC, that means number go up. I see a few of them. Only a few people are that degenerate, truly that messed up. The rest of them are kind of like, well, Monero's just going to get delisted, and Bitcoin is private enough, and it's fungible enough, and that's why it's integrating. And Monero could never do that anyways. And so, yeah, and our number goes up and yours doesn't, haha. Right. So I see a lot of that out there, but I don't see people too much straight up just supporting KYC in the Bitcoin community. But yeah, I mean, one thing I am seeing is it does feel like there's new people entering the conversation. There's new people that are asking about Monero. Some of them are Bitcoiners. Some of them maybe even were like maximalish, maybe not like fully straight up Laserite, or maybe only half Laserite. I don't know. But I am seeing more interest in Monero, and I am seeing people saying, you know what, maybe I should get some. This is the kind of thing that might happen slowly, right? In fact, it might even be better if it happens slowly. If we just get some mad rush influx, that could be a hype thing. That could be a speculative thing. That could be people not really stopping to take the time to think about what they're doing. So, it's like the fat lady hasn't sung on that. I wouldn't worry about it. In fact, with all of this news that's happening and just kind of like, I'm seeing just the very beginnings of that interest start to develop, I think there's a reasonably good possibility that we do see more people entering the Monero ecosystem specifically for the privacy. So, one can hope. Hopefully, that's what we see. But let's pivot here a little bit to Bitcoin, since Bitcoin is one of the big news stories here, and it's obviously more than 50% of the total crypto market cap. So right here we're looking at the Bitcoin regression analysis. Just like to occasionally touch on this. Obviously, this is the lifetime Bitcoin chart. We're looking at monthly candles here. The red line is the blow off tops. The green line is like the absolute highest deviation from the model. And then the blue line is sort of the non-bubble data. So what we do is we remove these blow off tops and we like sort of progressively chop the higher data until we arrive at this green line here, which is sort of like the green line is like sell the farm, sell your house, buy Bitcoin. you're probably going to do pretty good in terms of a speculative investment. So let's zoom in here a little bit to the daily and just kind of get our bearings on where we are at. Just in terms of relation to the blue line. So basically you want to DCA below the blue line, and then you want to DCA out of Bitcoin when you start to approach the red line. And you'll notice like this is actually right here. This is actually within 1% of the top back in April of 2021. So we are actually a little bit above that blue line right now. We're decently, I'd say we're decently above it. That doesn't mean just by the way, guys, this doesn't mean that Bitcoin is going to the red line post haste, right? The Bitcoin has pullbacks of 30 to 40% sometimes in a bull market. And if things were to drop, let's just go from the top here. If things were to drop 40%, that could take us down to 41,000. And by the way, if we go back here and we check what happened in March of 2020, right? So if we're thinking in terms of the 4-year cycle, which somehow matches the presidential election cycle, but I'm not making any conspiracy accusations on that. That's just funny, just like a side note. Anyways, March of 2020. We touched this green line. In fact, this point down here is a defining factor for this green line. We derive the green line from this point, among others, as being like one of the highest deviations from the regression model, from the best fit line. So the point is that, even after making crazy mad gains in from 2019 to 2020 to the tune of 4x, which is about what we've done here, things still crashed significantly and touched that green line. And if stock markets, if the rest of the macro markets out there have some kind of like major problem, and the scene is set for this to develop, it doesn't mean it's going to happen tomorrow, but we'll look at the macro in a second. The scene is set; it could happen. So just be prepared, right? Keep some dry powder, right? Keep some funds ready to buy. You typically want to have a little bit of cash on hand that you could spend if need be. So I do think right now, like the lowest possibility would be this green line. 25,000 would be sort of the absolute low. That's that's a buy with leverage kind of moment. Maybe it happens in the future, so maybe it happens at something more like 30,000. But at any rate, this chart doesn't tell you which direction to expect to go first. It just tells you where the boundaries are, and it tells you where you are relative to like just overall performance. So just thought you guys might find that interesting. Let's take a look at this is also the same chart, believe it or not. These are the same chart here in terms of the regression analysis. It's just that the 0 point here is effectively the blue line. So right here, this dotted line, maybe we'll just make that blue to make it more clear what that is. So this is the blue line. This is basically if you subtract price from the model. And so you'll notice we're decently above the model at the moment. In the past, we've been like significantly above the model, but you can see that this is curving down. So we won't get too much into the weeds into the math here. Hypothetically, if we touched this line right here, that would be about 140,000. And you'll notice over here, it's the same right here. If we were to go to the all-time high, like, or to the edge, the outer boundary, right, to the edge of the max possible price, that would be 144,000. Yes, I know. For anyone out there that's like, that's just math and statistics, it can't tell you fundamentals. Yes, I know that. We're not saying that this is a magical chart. We're just saying that this thing right here is statistical in nature, and it does help us to inform our decisions, to make better decisions, and to know when to buy and maybe when to DCA out. So this is Bitcoin versus the NASDAQ, and I like this chart because one of the things when it comes to inflation, one of the things you need to do is not just beat inflation, because I mean basically everything beats inflation over long time frames. You need to keep up with the other main assets that are benefiting from that inflation. And the NASDAQ is one of the primary assets. It's not really an asset, but one of the primary environments, let's just say, right? Stocks, tech stocks. That is what benefits from the inflation. You get these big companies, mega corporations, they take loans. Those loans are printed from nothing. They go out and spend that into the economy. The GDP goes up and their stock price goes up. So they're like the primary first beneficiary of this inflation of printed money. And so your asset, if you want to beat inflation, your asset needs to keep up with the stock market, basically, because otherwise you could just buy the stock market. And so, happy times for the last, we'll just say year and a half. Bitcoin has been keeping up with the stock market. In fact, it's overperformed it to the tune of about 2.5x. So still looking, haven't broken all-time highs in terms of the stock market. That's fine. I wouldn't be too worried about that. You'll notice these kind of big pleb lines here that I've drawn. Pleb lines are really basically just they're well, they do a few things for us, but they are visual reference points. And they work, especially if they're big headliner pleb lines, because they work because other people draw the same lines and they think it works, right? So you have markets are obviously an aggregate of a lot of things, one of which is the pleb action and people buying and selling and plebs buying and selling. So if you see resistance or support, plebs tend to like to buy on these lines. That's why I call them pleb lines. Just keep in mind, they're useful up to a point, and you can't you can't regard them. It's just like statistical analysis we talked about just a second ago. It's useful, just understand its limitations. Anyways, so yeah, Bitcoin here is kind of sitting in this consolidation pattern. Oh, well, that's an artifact of dividing by the NASDAQ is why that happened. Let's just stick to the daily. Yeah, Bitcoin is sort of consolidating here at this range. I'm not entirely sure that I like. I would like to say that it's going to go up or down here. I don't want to make any predictions in that regard. One thing that I forgot to mention to you guys, I wanted to talk about the Bitcoin monthly closes. Let's zoom this chart back in. Sorry, taking a step back here. Okay, so one thing that has happened here over the past, really since January, we have had 1, 2, 3, 4, 5, 6, 7 green monthly candles. That only happened one other time in Bitcoin's price history, and that was way, way, way back here, like at the very, very beginning. So you'll count here 1, 2, 3, 4, 5. Sorry, wrong one. Right here, 1, 2, 3, 4, 5, 6, 7. I don't exactly like to count these two little guys because this was the start of an uptrend, and technically these guys closed in the green, but I mean, the difference there in these candles is tiny, tiny, tiny. So technically it was 7 green candles, but in reality, it wasn't like the 7 green candles that we just had here, right? These were actually, for the most part, all green with a slight break in the middle there, but this came in the middle. So the thing that I really wanted to point out to you guys today is I don't like that we haven't broken the all-time high with momentum. So if we go back and we look at previous breaks of all-time highs, for the most part, they were broken with momentum, right? So you get to your monthly close happens at the previous monthly close, and then you break to the upside. And yes, technically we did set new higher highs. We eked out some marginal higher highs to the tune of about 6-7%. And then April looks like we're going to close down unless Bitcoin just takes off on Monday and Tuesday, which given the current news environment, I'd say that's probably a dubious proposition. But let's go ahead and take a look at like previous breaks of the all-time high. So here we go, 2020. We touched that all-time high, and then we broke with momentum, and then we kept moving, right? The other previous time that we broke the all-time high was right here, back in 2017. Right here. So we kind of touched it. There was a little bit of resistance for a moment, but then we broke that with momentum and then just kept going. Then same thing, we can look back right here. Basically broke through the all-time high with momentum and kept going. Right now, I'm not saying this to top guys. I'm not top calling here, but I am telling you that you should be cautious because we did pull back here in April after breaking the all-time high, after breaking the monthly all-time high. You really need a green candle. You really need to close the May candle that's coming up here. That needs to close at reasonably higher levels. Like let's just say 80,000, right? We want to see that thing actually close at 80,000 because in my mind, this is not yet a confirmed like actual bull market in the sense that we're breaking all-time highs and we're headed for this upper boundary. We're headed for 150, 200,000. It could very well be that some major pullback needs to happen here for some period of time. It does feel like there's a lot of hype that's gone on with the halving. It does feel like the ETF and everything, just overall, like there's just been so much hype here. And it could be that a lot of those gains were front run. It could be that that the reality is that perhaps absent those things, this market just needed time to slowly kind of move up before we get that spike. It feels like a lot of that was front run, which makes sense. Markets learn. Everybody knows the 4-year halving cycle in Bitcoin now. So, yeah, I guess I'm just saying, be careful. Don't think, okay, we hit the all-time high. That's it. We're going for the moon here. You just got to be really careful, especially like, okay, if you're just DCAing, then fine. But a lot of people see that and then they start doubling down and DCAing even more at the top or during a local high, and then you're going to get wrecked and you're going to learn the time value of money for a period of time before you get that back. And that can be painful. It especially can be painful if you put funds that you can't just let sit there for 2 to 3 years. When you invest money into something and then you bought the top and then it goes down, and then life hits you and you need to get money, and you're like, well, I guess I have to sell my crypto now, and then you're selling at a loss. Like, that's crushing. You could have just kept that in stupid fiat in a bank account and been better off. So I'm just saying, be careful when you DCA, especially when you DCA after mad gains have already happened. You don't want to get caught at the top, and you especially don't want to get caught with the realities of life, seeing you being forced to sell at a lower price. So that's just like money management. That's a little bit of a money management tip there. Okay, let's take a little look at some degeneracy here. Hey, where did my degeneracy go? All right, let me find it. I swear that I had this pulled up. What do I call it? Z Crypto Plus. It's even named like degeneracy. Okay, here we go. These are all like the boomer. These are the boomer degenerate coins, right? So we've got Dog, we've got Ripple, we've got Binance shitcoin. We have Link, which actually I think does actually do some things. One thing that's interesting about Link is it kind of tends to often overperform first before major moves in the market happen. So lately, I've kind of been looking to Link to tell me when a major move is about to start in the broader markets. So anyways, the point of this chart, nothing has happened. BNB had a little excursion here to the top. They had a lovely field day going off solo for a moment. I guess that only lasted for less than a week, basically a week. And now they seem to be coming back down. Something in my brain doesn't like that in a broader analysis, but we won't dive into that. Anyways, that's shitcoins for you. These are sorry guys, these are Z-scores. Z-scores are basically a way of comparing assets that perform. They have different volatility, assets that have different prices. It's a way of sort of normalizing them all to a 0 point and saying, okay, how are they performing relative to their own past history? Z-scores are like a very fundamental thing that we use in statistics to understand and compare against just different charts that are otherwise might be difficult to compare against, and to tell when something is out of trend. Okay, so this is Bitcoin dominance. It does look to me, so yeah, Bitcoin dominance has been good. It's been on the up and up. I feel like this chart is starting to just roll over a little bit. I'm not top calling here. This chart has kind of like this bullish feel to it. And you'll notice that we've got the wave magic turned on again. The blue lines are upper standard deviations, and the purple lines are sort of like a derivation of that. They're like higher than the upper standard deviation. Again, these are statistical metrics. Humans in aggregate are really good statistical machines. We could talk about that more someday, but I think overall markets in general know when something is trending. And so this is just a visualization for us to understand, when is something actually out of trend? When is it trending higher? When is it sort of occupying that uptrend level? It's another way of looking at that, other than just drawing, stupid, dumb pleb lines. It's a statistical way of looking at that. So technically, you would look at this wave magic and say, okay, everything is still uptrending, right? You've got the upper standard deviations in blue still have an upslope to them. And price, at least the Bitcoin dominance, has been basically riding those upper lines. At the moment, things fell out of the sort of rising wedge structure. It's an ish structure. It's not a perfect rising wedge, but it fell out of that structure. It's been riding the underside of it, tried to get back up in here, wicked into that area, and then fell back down. So right now, any movement, any potential movement that happens on the Bitcoin dominance that brings us down here is going to roll these blue lines over. And that's typically a sign that the major move is done with, right? And this is a move that's happened for the last year, right? So it's been 12 months. It's getting a little bit long in the tooth here. Just know that Bitcoin dominance may be experiencing some resistance. There's also this line right here, this dotted line. That shit goes all the way back to like the last beginning of the last bull market, right here. So that's where it's a natural point. That's a natural point to draw the horizontal resistance. So next thing we're going to finish off here with just looking at the macro very quickly. We don't exist in isolation. Bitcoin markets, Monero markets, everything exists. Everything exists with in the broader context of inflation, printing, governments, money markets, stuff like that. So we'll start with the dollar index, just because that's an easy place to start. Everyone basically knows what the DXY is. We've been talking about this probably on its way here to the upper standard deviations for a while now. It looks like there was a little bit of a cool off period here for the dollar index. This looks right now a little bit like a bullish flag. You can notice this last green candle that happened on Friday. If this thing breaks right here, and I know I'm drawing yellow lines, but you could hypothetically just draw pleb lines, right? We could just draw them like that. But yeah, as soon as this thing breaks to the upside, I would expect Dixie. I would expect that momentum to carry it here into the upper standard deviations, where somewhere in that general zone will probably be found some resistance. This is where, this is getting pretty high, not quite as high as when Dixie just like mega pumped to in the depths of the bear market in 2022. So again, this is the kind of thing we're saying that volatility is compressing on the dollar index. We should expect at some point this thing will break to one side or the other. It's kind of hard to say which way I want it to break. If we break to the upside, well, that probably means that inflation is going to be a little bit more contained. And if it breaks to the downside, that means we're going to get mad gains. And mad gains help me, but they hurt. They hurt anyone else that doesn't have coins and stuff that goes up a lot in value, that doesn't know how to play that game. So, anyways, yeah, just that's the Dixie. It tends to be inversely correlated with risk on. So if Dixie is rising and it's been rising, that means that all the risk assets like NASDAQ and crypto they're more likely to suffer problems in their price. And if Dixie goes down, that usually is a sign that that things are going to be going up. So another along that same vein, and a very, very important chart, is the reverse repos. Reverse repos are when institutions, not you or me, but institutions park money with the Federal Reserve overnight, and they get the federal funds rate for doing so. That's money that's not doing anything. It's just parked with the Federal Reserve. It's highly liquid because they can pull it out the very next day and invest it in something, but it's money that is not going anywhere. So this was the entrance into the bear market, was seeing a lot of money getting parked with the Fed, and that money had to come from somewhere. So right now, this bull market has probably in large part been motivated by the $2.5 trillion down to $500 billion, right? So we're looking at about $2 trillion of money came out of reverse repos, and that money went somewhere. Most likely it went into stocks, it went into risk. It's seeking yield. It's seeking more than 5% yield. And with the way that stocks and crypto have performed, well, obviously we've had better than 5% gains. So as long as there is mana to give, juice to squeeze from the reverse repos, I still tend to think that the markets could plausibly continue to go up. Now, there's not much here. I do wonder if they're saving some of that firepower for the election in the case that they want to put Biden back in. Maybe they don't want to put Biden back in. I hope they do. We won't talk about that, but basically a fraudulent election is the best way for people to realize that they need to disobey the government. And that's the only way we get out of any of this bullshit, is we have to disobey the government. Sorry. No, sorry, not sorry. I'm not even not sorry. So anyways, okay, gold here. We're looking at gold. Let's go to the weekly. Gold broke this very long-term rising wedge, something we'd been talking about for a long time. And it's such a long pattern. You talk about it every week and you're like, it's going to happen. We're waiting for it to happen. It finally happened. Kind of really hoping that gold can make it all the way up here to that line. That's about 10%. That upper boundary you'll see there is just really, really connecting the 1980 high to the 2011 high. So that's a very large rising wedge. I would hope that we can make it all the way up there, or at least get close. Maybe we'll turn on the wave magic here and see what that tells us about where we are. Yeah, so gold is actually pretty high. In fact, typically speaking, let's go to the daily. Typically, getting to these purple lines here, that's really that's you would almost say that's getting out of control. I would say, just based on that, my guess is that if gold's going to make it up here to this line, it's probably going to need to do it in some kind of fashion like that, right? Maybe something like that. Again, that's totally speculative, guys. Like, markets unfold in very unique ways. You can't just look at some lines and think that the past analysis, the statistical analysis, whatever, like, that's not going to tell you necessarily where price is going. Markets are composed of a lot more factors than just that. Let me see. There was like one other thing I thought we needed. Oh yeah, bonds, obviously bonds. So we look at the bonds every week because this is going to be our bellwether. This is going to be our canary in the coal mine in case there's a big tail risk event. In other words, a market crash. Everyone gets scared. Everyone sells at the same time. The institutions, whatever, leverage unwinds. This is a chart that should hopefully give us a little bit of advance warning. I am slightly concerned that because markets learn, this chart might not give us hardly any warning. We should see the signs. We should see the yield curve inversion. The red lines are the overall yield curve inversion of the bond market. We should see this thing get to the 0 point. And if and when this thing starts spiking up, that's really dangerous territory. The other thing that we would hypothetically see is that bonds would start rolling down. And particularly, they would be below the federal funds rate. And you'll notice they already are below the federal funds rate. But really what we're looking for is violent moves in the bond market. Violent moves in the bond market signal to us that there really could be, that people are scared, that institutions are moving, they're preparing. And so that's why we look at this chart every week. Right now, nothing really notable here happening. Just the slow roll, the slow trend, the slow movement in the direction of some kind of tail risk event happening. But I wouldn't be calling for that here in the near future. I would be looking, months down the road here, maybe later this year, maybe later next year. But we look at this chart every week just because, we got to keep our bearings. We got to make sure that we're looking at the stuff that's important and not missing anything. So I think that's about it. The Federal Reserve has a meeting next week. I think, I don't have good reasons to say it, but my intuition says that this meeting will probably be ever so slightly more important than the previous meetings. Maybe, why I probably say that is because the NASDAQ or the stock market just in general seems to have done a little bit of rolling over. It seems to have kind of topped out just a little bit. So basically, you'll notice that, again, drawing pleb lines right here. But there was kind of this very clear, and this is the weekly chart right here. There's this very clear way to just connect, these two lines right there, and the stock market just capped out there. The other thing that you'll see on the S&P is that it was occupying this fairly narrow band, and it was actually quite a sharp increase. So if we scroll back here, to the 2020 and 2021 bull market, we're just going to take this line here with this upward channel that the S&P had occupied here for the last couple months, really for the last 6 months. And we just slide this over here. You'll notice that that's a steeper curve than really almost any time during the bull market that happened in 2020 and 2021 for stocks. So things were really moving. Like there was a lot of bullish movement here on stocks, and things have kind of pulled back and taken their time. So it wouldn't surprise me if Jay Powell gets up there and starts talking a little bit more about the possibility and the data-driven reasons for lowering the federal funds rate, right? They speak in these like cryptic lawyer ways, and they've got to, because like the markets hang on their every fucking word. They're like, oh my God, what's Jay Powell going to do? He's going to lower rates. When is he going to lower rates? Oh my God, I need my cocaine fix. And so that's like the markets do that. So they kind of have to talk in this like very lawyer droll way, and they have to like sort of indicate things rather than actually saying them half the time. So one thing I did want to point out here, and the last thing we'll point out here is this is the wave magic on again, wave magic just being the standard deviation analysis. You'll notice so we had talked about as we were breaking these blue lines and on our way up here, said, listen, we're probably headed for these purple lines. That's where the markets are headed over very long time frames. That's actually the stock market loves to, and we won't take a look at it today because we're a bit long already here on the price report. But the stock markets do like to basically maintain or at least touch these purple lines regularly on the way up. So anyways, we did finally make it into that zone. Things are pulling back here. To me, this is no man's land. I wouldn't be able to tell you where we're going down here or we're going up. Maybe we're going up and then we're going down. Probably a lot might depend on what Jay Powell says next week. And it wouldn't surprise me if the markets just kind of remain flat. So yeah, that's what we're looking at here, guys. Let me see. I haven't checked the YouTube comments. I'm so bad about that. Was there any big YouTube comments that maybe I should respond to, guys?
Nothing really directly price related.
Okay.
Wait, I don't know if you can make sense of this one. Anyone else here of pending U.S. legislation that limits crypto liquidation profits to 1,000 cap per year? I haven't heard about that. Not sure.
No, I don't. That's probably a misinterpretation of, I don't know, something that they're, right, because they're talking about doing capital gains or taxing your unrealized capital gains.
Yeah. No, but I don't know what he's suggesting here, so sorry about that. Nothing else. Buddy, stick around if you can, please, so you could participate in the roundtable discussion with everybody.
Yeah, sure. I'll definitely be here.
All right, and yeah, fantastic. We'll probably, Tux, I think maybe we'll try to run through the news real quick just to get all the stories out there, and then we'll bring everybody up, and that gives Seth a little bit more time and the others to jump up. I don't see Francisco in the back room yet, or Mike. So,
all right, let's do that.
Thanks, guys.
Thanks, Bawdy, as always.
Thank you, Bawdy. Anybody listening, like and share. Let's keep growing this. Get the word out. Let's get a bunch of people in here participating. Now's the time, guys. I mean, I do see that as the silver lining with everything that's going on. More people are waking up to Monero, the need for Monero, and I think it's a good time for us just to put more energy into getting the word out to people that are sitting on the fence right now, thinking about Monero for the first time. Those that are Monero curious, bring them in, bring them into the tent, have them come learn. This isn't a maxi clan over here. There's those that are perhaps a little bit more passionate than others. I put myself into that camp for sure, but we're always try to maintain our open-mindedness, willing to talk to anybody about anything that's digital cash related. You can come criticize Monero, come talk about it, come talk about your concerns. That's what we're all about. But let's quickly run through the news, and that will give our guests some time to jump up. So, Tux, you want to go ahead and do that? I guess, is Tony around for the news?
Yep, looks like it. Let's roll it.
And now for our weekly news segment.
Hey, everybody.
Hey, Tony.
Hey.
How's it going?
Good. How are you guys?
Good, man. Good. How you doing?
Good. We have a lot to talk about. A lot of big stuff, actually, this week. And some of which are quite concerning. So we'll try to get through it as much as we can.
Yeah, try to run through it all. We don't have to go super detailed into each topic because we're gonna bring up the special guests, and then we'll probably touch on a couple of these larger topics. But if we could at least kind of cover the gamut of what's going on out there.
Yeah. So mostly we have big news, and then we have a couple small ones. So I'm just gonna go one by one, and then, like you said, we're just gonna have like a quick overview. This is the first thing. So this is crazy. Essentially, this is gonna be a form from the IRS in which you need to. It's designed to collect your ID and detailed transaction data at scale from brokers. The form captures unsurprising data points such as date acquired, date sold, proceeds, and cost of pieces of crypto assets sold. So the IRS wants more and more information when it comes to your crypto and your dealings with it. This information is needed and helpful for the taxpayer to complete their crypto tax filings, yes. However, the collection and reporting of the following additional data points to the IRS at scale could lead to major privacy and security concerns. They want a lot of information on this one. So,
yeah, I mean, do we know if this is like a rumor or if this is like a real form that's coming out? I haven't done my due diligence on this.
As far as I understand, is that this actually has been issued and it's going to start in 2025, the 1st of January.
And so
I'm not really sure, but as far as I understand.
Mm-hmm. Okay. All right. So maybe we'll bring that up later in the discussion if anybody has more details on that. But it's related. It's related to the attack. So IRS kind of circling the wagons here, effectively potentially requiring people to report all their crypto holdings, essentially, is what they're looking to do, and report all their crypto transactions.
And essentially brokers like centralized exchanges, DeFi, so they'll be required to generate this form for each sale transaction and submit that info to the IRS. So it says certain DeFi exchanges and wallets. So yeah, it's going to be interesting. Then we have the Senate passes Biden signed surveillance bill despite contentious debate over privacy concerns. So what is interesting about this one? Let me see if I can find Friday. Yeah, so they came up with legislation on a late Friday night, and by Saturday, they've already gone through with it. Essentially, this is going to be a bill which is only for 2 years instead of 5, which is going to allow the government to spy on you, essentially. And so they said that they made some modifications to it to address past abuses by the FBI. And essentially that it's not going to be used against the citizens. It's just a critical tool for safeguarding national
Respects the doubt.
security. Yeah. And yes, in the past.
So yeah, that was more big news this week of the government increasing its ability to, or its quote unquote legal ability to surveil U.S. citizens, extending FISA, and that passed, and it was signed by Biden.
And it's interesting because they call this one of the United States' most vital intelligence collection tools.
Yeah, it's basically a workaround way for the government to spy on citizens without the need for a warrant, is effectively what that is.
And it's interesting how some of them were against it because it was for a 5-year period, but then when they changed it to a 2-year period, some of them they thought, yeah, okay, that's better, so I'll vote for it now. Well, 2 years or 5 years is still bad, no matter what it is. Then we actually have a couple more articles on this, but this is what the situation is. This is Senator Ron widens floor speech on a terrifying provision in the FISA Section 702 bill that will virtually
this is a good video to play. Kind of, I think he gives kind of a good summary of the implications of what basically is being passed here. The FISA extension, if you want to play that.
Yep. So essentially, it's going to make virtually everyone a spy. So let's go ahead and watch it.
Which I just read to the Senate means that if you have access to any communications, the government can force you to help it spy. That means anybody with access to a server, a wire, a cable box, a Wi-Fi router, a phone, or a computer. So think for a moment about the millions of Americans who work in buildings and offices in which communications are stored or passed through. After all, every office building in America has data cables running through it. The people are not just the engineers who install, maintain, and repair our communications infrastructure. There are countless others who could be forced to help the government spy, including those who clean offices and guard buildings. If this provision is enacted, the government can deputize any of these people against their will and force them, in effect, to become what amounts to an agent for Big Brother. For example, by forcing an employee to insert a USB thumb drive into a server at an office they clean or guard at night. This can all happen without any oversight whatsoever. The FISA court won't know about it. The Congress won't know about it. Americans who are handed these directives will be forbidden from talking about it. Unless they can afford high-priced lawyers with security clearances who know their way around the FISA court, they will have no recourse at all.
Wow. And this is nothing new. It happened in the past. So I highly recommend people read 1984 by George Orwell, because that's the direction in which we're going. And then there's another book, which I highly recommend everybody read, The Gulag Archipelago. So essentially, this has happened, and any single person in the Soviet Union could essentially take you to the Gulag. Could be your neighbor, could be your taxi driver. What would usually happen, for example, you would be in a bar or the theater, and then somebody would come up to you and they would say, hey, I know you. And then they would mention your name, and then you wouldn't know who they are. And then they would ask you to come outside for a little bit. And then they would go take you in the Gulag for no reason. So yeah, now spying is essentially encouraged by the government. It's encouraged to spy on your friends, your neighbors, on everybody, which is crazy, the way that we're going. Essentially, it's just going back to communism. But way worse, 1984, because now we have technology as well. So now you have no way to escape. Yeah, it's crazy. Then we have, this is a separate topic, but 82% of wallets that hold Bitcoin cannot move right now due to high fees. And this one. Okay, so we'll go over this one a little bit, but people criticize Monero. So we talked about the government a little bit, Bitcoin. I think we have a couple more stuff on Bitcoin, but let's talk about Monero a little bit. People criticize Monero for a couple stuff. First thing, delisted from major exchanges. That's actually a good thing, because it is expected that a true freedom money would be blocked from the legacy system. That's what's happening to Monero. And yeah, we have low liquidity and all this stuff, but it's becoming more stable. And then if Monero persists, even though it's hard to get and even grows, then that's the true freedom currency, not Bitcoin or the other ones. Spending lock. Due to privacy concerns, you can spend XMR you've just received. You have to wait for 20 minutes. Also true, but it's not an issue in most cases. In real life, people rarely do this. Long first sync time. Yeah, so he goes into that. Not that many places to spend Monero. Well, it's the same for Bitcoin and USDT, but actually, you have more places to spend Monero in if you get the Cake Wallet app. You can get gift cards using Monero, and now you can buy stuff from any place, Adidas, Starbucks, I think Nike, all these places. So you can use your Monero if they don't accept it directly to get gift cards. You can get Visa cards. So you can live pretty well on Monero using the gift cards. Is it optimal? I mean, you would want to use Monero, but it's still a really good thing for now, until we get more people to accept it. Not very accessible beyond the black market, very niche. XMR shouldn't be positioned as a dark net money. The fact that it's used in the dark net only underlines its better privacy. If they trust it with their life, then it's good enough for you, because they need tools that are good enough to protect their life. Because if they're caught with what they do, then they will face very bad things. Development is slow. There's actually a lot of stuff happening in Monero, as we've been discussing for the past couple of weeks. The multi-sig is cumbersome, true, but it's a wallet-side UX issue, which will get resolved at some point. No smart contracts, depends on how you look at it. No smart contracts equals smaller attack service. Its name isn't Bitcoin. So he goes into a lot of stuff. Infinite supply. That's another thing that people like to bring up about the telemission, but then they don't think about miners in the future and what's going to happen to mining and the reward system. And there's a lot of things to talk about when it comes to telemission that is really interesting, but it's all really well made. It's not just an infinite supply that it's, doesn't work like that. Yeah, so there's poor store of value, but unlike most cryptos, Monero, in my honest opinion, is the further away from being a Ponzi scheme. Yes, poor store of value. Monero is holding its value pretty good, I would say, and the ultimate form of money should be the store of value as well. And the fact that Monero is not on a lot of central exchanges and stuff like that makes the price more stable, and the fact that it's persisting and people see value from it, then it's gaining stability when it comes to price. So it's not fluctuating a lot. It's been pretty stable. So there's a lot of stuff that people talk about, but these are just a few points. Yeah, so Monero goes beyond privacy. There's so many nuances when it comes to Monero that are amazing. Such as telemission, such as dynamic block size, and all this stuff. The fees going down the more the people use it. A lot of stuff. Luke posted, he retweeted something from Everywhere Finance. So they made XMRT project, a wrapped version of Monero, which will be available on 1,000 chains. And essentially, a bridge to freedom, privacy, and liquidity. Essentially, what Luke said. This is a near complete lack of info on how they'll actually achieve transparency. No saying reserve proofs exist isn't sufficient, and now they'll actually create a security custody environment for the Monero. It's the way. This will be really interesting to actually talk about when everybody else hops on about this project. Proof of work technology from JFOB. That's funny. T for transparent. Okay, so let's move on. Why Monero is free to money? This is another post about Monero. It will be easier to support something like Bitcoin Cash or Litecoin, Untraceable said. Both work, they both offer privacy tools, are listed on the exchange, and are not subject, most importantly, to the regulatory risk Monero is. So why Monero when there are easier options? And then he goes into detail, chain analysis, and they've never been able to break into Monero, none of them so far. And then during the block size wars, we were promised Lightning would scale, will solve scaling issues and high fees. We continued believing Bitcoin was our best chance at freedom money. We wasted a decade. He essentially goes into Bitcoin and the downfalls of it when it comes to Lightning and scalability. And he talks about that. Bitcoin did not scale. Lightning failed. No layer 2 offered privacy, and none of the privacy enhancements proposed for Bitcoin were ever implemented. This is John Carvalho, and then he talks about the design of Bitcoin, and that the Lightning Network is a joke. And actually, I'm gonna play this because this one is really interesting, and then we'll go on with the other things.
Degree of complexity and fragility of Lightning, and especially for the use case that people intend for it, which is like end users running their own nodes, and even more crazy end users running their own routing nodes. It's just very, very fragile. And going through that experience just made me realize that the design is kind of a joke. Like, we can make it work. We can do our best. But like all of the kind of narratives that came with it in the first couple of years were really exaggerated. You know, like things like Lightning is going to kill Visa and everybody will be using Lightning. And there are a lot of issues with scaling it economically. There are a lot of issues with dealing with all of the multiple implementations and incompatibilities. And again, the fragilities causing force closes, liquidity management, and it goes on and on and on. And all of the things that like people that aren't engineers and aren't building these products, like even if they feel like they fully appreciate the complexity because they like study it a lot, they still don't get it. Like it's.
And that's the thing. So we're gonna have Seth later, and then maybe we'll talk about this. But he dealt a lot with Lightning, and so far I understand that it wasn't easy for him. So Lightning, if it's really going to replace Visa and all this stuff, it should be something easy to use, which is actually the most important thing. I mean, one of the most important things. It has to be easily usable by people. Not everybody's going to be technologically wise, and not everybody's going to be interested in these things. Like, they just want to use it and have it work. And it doesn't. Then this is Noel McAfee, chair of philosophy department at Emory University, being arrested.
I'm so sorry. Is there anything I can do for you right now?
Yes, can you call the philosophy department office and tell them I've been arrested?
Philosophy department?
Yes, call the philosophy department office.
I will. What's your...
Noel McAfee, I'm chair of the philosophy department.
I got you.
President-elect.
Yes, this was interesting. Somebody said one can support the Palestinians without supporting Hamas. Same thing with supporting Israelis. Also, like, what was really interesting and shocking. So Yanis Varoufakis, kind of sideline, former Minister of Finance of Greece, he was actually banned from entering Germany because he talked about, the economy and a lot of things. He has a lot of interesting books and talks, but he talked about Palestine and other things, and he was banned from Germany. So the West is going down as a whole, and it's sad to see. No, this one. Okay, so they're really going at it. Also, let me look in the comment section a little bit on YouTube. Foxcoid said 52 likes. I hope it gets to 100 soon. We hope so too. 58 now, close to 60. The Paper Vigilante said it's most illustrating, talking about current supply and mining emissions. It's less than Bitcoin currently in nominal terms. Then we have Finari saying, I think XMR is real money. You just need real DEX for daily use case. Interesting. Okay, let's go back to this now. So they're Untraceable said, they're really going all out recently. They're trying to close the gates before any more of their herd escapes. True. Their CBDC launch must be nearing close. Oh, that's going to be interesting. So U.S. Senator Elizabeth Warren writes a letter to the DOJ claiming cryptocurrency is the payment of choice for child sexual abuse materials. You know what also these people use? Forks and knives and plates and other stuff. That's like, it's not the tool that is bad, but the person behind it. So, yes, there's people that use Monero for nefarious activities, but guess what? There's a lot of good people watching our show and of course beyond that are using it for good things, for benevolent things, helping people, donating, and all this stuff. So these things just don't make any sense. But Elizabeth Warren, she took her precious time to write this letter saying, "We are writing to express our concerns." Yeah, she's very concerned about this one. Regarding the use of cryptocurrency in the illegal trade of child sexual abuse material, and to obtain information about the tools needed by the Department of Justice and Department of Homeland Security to end this illicit trade. I agree. I would want it to end. Also, everybody would want it to end. But it's just going for the tool, and it's just not wise the way they're doing it, and it's a clear attack on
Tony. I see we have Seth, we have Mike, and we have Arctic. They're ready to jump on.
Awesome.
If you want to just kind of quickly run through the rest.
Yeah, so so we're halfway in. I'm just gonna go quickly over those, and then after they talk, maybe we can go over it again on like specific ones. Okay, so this one, Phoenix Wallet, basically is going to be removed from US App Store due to recent events in the government. This is them saying that they're going to remove Phoenix Wallet from the US App Store, and probably we'll go over it again later. Samourai Wallet, we're going to discuss some stuff on that now. Then we have Wasabi Wallet. ZKSNACKS is now blocking US residents and citizens, which is crazy. Then this post by Seth on cryptocurrency money transmitting services that are not registered as money service businesses. I assume we're going to talk about this now. Then Samourai, and essentially these last two are just about Samourai devs which were arrested and addicted on money laundering charges. So this was a new section. Now we're going to have Seth and everybody jump on. And probably after we're gonna go over.
You could play this one, the Chris Black video where he's interviewing Samourai. Let's play that, and then we'll jump to the special guests.
Sounds good. Should I play the whole 3 minutes?
Yeah, go ahead and play that.
Okay.
What do you think are the odds that you are going to get the Tornado Cash treatment at some point in the future? Like, what do you think are the odds of that? And I'm just wondering if you think it's an inevitability in a way, or if you think it's of a low likelihood. It sounds like you're more on the low likelihood side.
Well, I think that if things change and there's clear violation of the law changes, and we didn't change and we were violating the law, then yeah, I'd expect it. I don't think we're violating the law, so I can't imagine why they would come and and do that. And if they did, then again, we do pay lawyers for a reason. We have them on retainer. We'll fight it, obviously, but that's what you do when you're charged with something you didn't do. You fight it and you hope for the best. I'm not going to live in fear. Like, I'm not going to do this because they might come after me for it. Well, that means I might be doing something. I might be onto something.
Well, I'm more concerned than you are about this, it seems like, which is interesting. But why do you do this work, knowing what's at stake and knowing what the risks are? Like, why do you want to keep going?
When I got into Bitcoin, I got in hard, right? Like, not like, the brain dead idiot laser eyes that you find on Twitter today. Like I came in hard on an ideological perspective. And again, this is pre-Ethereum, pre-Monero. This is pre-all. It was just Bitcoin, and Bitcoin was all there is. And, you know, I'm still into the promises that Bitcoin offers, though more jaded, of course. But, you know, I'm still ideologically really, there's a strong passion there for what Bitcoin can offer, and I think does offer if you're able to, you know, utilize it in a certain way, and you're able to you know, use the tools and extricate yourself somewhat from the system. The promise is immense, and building the software to make what I want to see happen, there's nothing quite like that, you know, really. So I the fact that it's used and enjoyed and, you know, an essential tool for so many people, more than I ever thought. You know, like I wouldn't want to stop doing it just because it's so interesting and fun. But two, like I've never since I was really small, I've never been good with people telling me, no, you can't do that. You have to do this. I kind of, if I want to do something, I'm gonna do it. And that's the same with this. So it's just the reality of it. I hope nothing like that happens. If something like that does happen, I'm prepared to deal with it and fight it. And I think that, you know, we'll be able to fight it, hopefully, if it does happen. But I don't think it will. I don't think it's highly likely. I think it's possible, but not highly likely.
Wow. It's kind of chilling not to.
All right. Yeah, that is kind of chilling. I think it's a good segue to the guests. Let's take it away. Tux, you want to run the guest segment? Let's bring everybody up. Tony, thank you, man.
Awesome. Thank you, guys. Thank you.
Yep. Thank you as always, Tony.
Yep.
The Monerotopia guest segment is sponsored by Cake Wallet. Store, send, receive, and exchange your Monero and Bitcoin safely on iOS and Android too. Cake Wallet is open source, and you always control your own keys.
All right. And do we have Mike? I saw Mike was back there. Did we lose him?
You guys hear me?
Oh, there he is.
Hey, what's up? Good to be here with all you guys.
How's it going, Mike? Thanks for jumping on. Seth, thanks for jumping on. Arctic, as always, thank you. Greatly appreciate you guys jumping on today. I guess we'll get right into it. The Samourai wallet indictment. What's your take on it, guys? I don't know if Seth, you want to give it the first go?
Yeah, I can just kind of quickly dive in. I know there's been a lot of different people unpacking it on X and talking about the implications of this indictment. But a pretty crazy step in the ladder towards totalitarianism that it seems like the U.S. Department of Justice, at the very least, I don't necessarily mean the whole government, but at least the DOJ seems to be wanting to take. It's something that we've been seeing start to happen through the Tornado Cash case. First, they came for the centralized mixers like Helix, like Chip Mixer. They escalated to Tornado Cash with sanctions. Then they indicted the Tornado Cash founders last year. And it seems like this is that next step. I think definitely something where I expected it to be Wasabi Wallet next, if anybody, in the space, just because they're a much larger enterprise and have some much larger documented cases of illicit actors using Wasabi. But they went after Samourai. And I think the scary and interesting part is it seems mostly based on the way that they spoke publicly. So there's a lot of kind of intermingling of free speech issues, of obviously the ability to create, publish, and run open source code. And then more broadly, just the concept of, can someone provide a service that helps people gain privacy, even if not taking custody, and do so in a way that doesn't make you a regulatory target? Because that's the big implication here, and why there's a lot of panic right now on the Bitcoin side of things with Lightning service providers, the potential risks there,
really any kind of service provider on in the Bitcoin space is pretty much panicking at this point, trying to figure out what's the next step for the government and what are the implications of this. But I know it's far reaching. It's something where I know I tweeted this the other day, but I'm more thankful for Monero than ever as this stuff happens, because something that I think a lot of people forget that aren't in Monero or haven't been in Monero for long is that Monero has been building towards this adversarial environment from day one. This has always been the idea: is governments are going to fight us, so how do we make it as hard as possible to shut down Monero as a decentralized protocol, as a decentralized network? And all of the work that's gone into it oftentimes gets kind of maligned as being pointless, but we're seeing more and more that this stuff is vital. And a lot of kind of my thoughts and efforts, I think I'm kind of figuring out where Monero needs to grow in the focus that I give more than I was before, because a lot of the other solutions on the Bitcoin side that I thought were good enough for many people are going away right now, or being very much attacked by the government. So I know that was kind of broad sweeping, not too much on that.
Yeah, no. I mean,
but we can get into the details of that.
I'm asking you to summarize quite a bit here, and what? So is it affecting you in terms of the advice you'll be giving and whatnot? Obviously, Samourai, while it doesn't even exist there anymore as an option, but overall, are you kind of effectively moving away from advising people to use Bitcoin privacy tools versus just use Monero type thing?
Yeah, I mean the problem is, I felt okay about the Bitcoin side of things before this. Because you could acquire Bitcoin, no KYC, which is already a huge step forward over the major risks that face Bitcoin. And there were good on-ramps for that. You can still do that, thankfully. But after you do that, to gain privacy, my general recommendation would have been use Samourai Wallet, or usually actually use Sparrow Wallet, because I just think the desktop platform made a lot more sense for that. And then for spending, usually the recommendation would be use those mixed funds and use a good Lightning wallet like Phoenix Wallet. But in the span of 3 days, Samourai Wallet is gone and Phoenix Wallet is gone for US users. And those were by far, I mean, that was the only real achievable way from a user experience perspective for the average person to gain privacy and be able to spend easily in Bitcoin. And the piece that a lot of people forget is that Lightning's privacy is heavily dependent on on-chain privacy. And so if you lose the interim step of using Samourai Wallet to gain forward-looking privacy, the actual Lightning privacy that you gain is drastically reduced, especially when using any service that doesn't, well, there's really no way to have good on-chain privacy with Lightning now. I mean, we're kind of stuck at this point. And the only real alternative as far as on-chain privacy goes is a tool called Join Market, which is a decentralized coin join protocol that functions similarly, and that is collaborative transactions to Samourai Wallet. But there's no centralized entity. There's no central coordinator. There's no central thing taking fees or having any involvement in the way that right now seems to be regulatorily risky. So it's a little bit safer, but it's a lot harder to use. You have to self-host an app to be able to use it called Jam, which is like a UI that's built around it. And so it makes it a lot more complex. And what I think was a reasonable workflow for people who wanted to stay in Bitcoin, really for me turns now to, if you want to keep storing wealth in Bitcoin, and I know there's been some good pushback for this on X, but there's a lot of people who are not to the phase of understanding that Monero can be a good store of value. But for now, while they think that it's only Bitcoin, start with Bitcoin as a store of value, but buy enough Monero that you can spend whatever you need each month, and essentially treat it like your Lightning wallet. Until they start to understand what Monero actually is, how amazing it is, how it can be a store of value, and how its natural properties actually should make it a better store of value. Those sorts of things are important, but I think it's a step to, I don't know if orange pilling is the right word with Monero. Maybe we need a different color, but orange pilling people into Monero and understanding that your layer 2 doesn't have to be a native layer 2, but Monero is really a perfect layer 2 for Bitcoin users who still want to stay natively in Bitcoin, with tools like atomic swaps, with tools like Samourai coming up, with Havano whenever that launches. Those types of things really are going to enable this use case more. And that's the way I'm shifting, is my recommendation is really going to be, if you want to stay in Bitcoin for saving, that's fine. You need to store it well. You need to avoid KYC, but really just use Monero for spending as much as possible.
I think it's also important to realize, while that is a good bridge to have for Bitcoiners into Monero, that kind of that message of store your wealth in Bitcoin and then use Monero. As I think I've always kind of been against that, viewing Monero as this tool that you use just for transactions. And I think one of the reasons to be against that too, and perpetuating that idea, is we don't want Monero to become viewed as a tool that's used for obfuscating transactions. We want it to become viewed as a tool that's just used as money, right? Not this thing that you go to wash your crypto, because that creates this problematic element where the authorities could say, oh, we see that you're out there pushing this tool that you want people to use to essentially wash their funds. And that's not what we want. We want people to use Monero for transacting peer-to-peer. We want them to use it as money because we think all transactions should be equally private. Not just a tool that you go to when you need to essentially clean your Bitcoin tracks, but a tool that people should use by default for transacting.
Yeah, I definitely get that. I think the only pushback I'd have is just that I'm very, very careful not to advocate people just send Bitcoin to Monero, spend. Because not only is that, yes, it sets this bad precedent of the concept that like Monero is a mixer for Bitcoin, which it's not, but it also provides abysmal privacy because of the Bitcoin side of things. Doing that immediate, I'm sending Bitcoin to get Monero to spend immediately. You don't actually gain strong privacy doing that either. So that's one, like, it's kind of a nitpick, but that's something that is really vital from the perspective of I'm not telling people just to use it as an interim tool, but as a hot wallet of sorts that also provides privacy. But I think you're right that like I'm trying to kind of straddle this line between advocating people to use Monero both as a store of value and method of exchange, even though, like, if we're honest, historically, Monero has not been a fantastic store of value. So I also don't want to advocate for people to potentially lose money, but I don't generally push people to use any of these things as a store of value. The way that I approach that is when someone is clearly already using Bitcoin as a store of value, I say you can get started using Monero as your medium of exchange. And it opens that door to people understanding like, oh, like maybe it's actually kind of nice to be able to store my wealth in something that doesn't give away all of my privacy, that's not revealing when I spend my money how much I'm actually saving on my hardware wallet or whatever. So for me, it's a big transition step, and kind of the way that I laid it out a few years ago is that I see people starting there, and then they quickly figure out that like Monero is a fantastically valuable tool for so much more than just spending. And so they start to shift and grow. So it's more that when I'm talking to hardcore Bitcoiners, that's the approach. But if I'm talking to someone who is not in Bitcoin or Monero, I'm going to push them straight to Monero. That's, I think, the goal normally is that they can store wealth in it, they can spend directly from it. They gain better privacy when all of their storage and spending is in Monero, rather than if they store in Bitcoin and just buy monthly or whatever. So there are a lot of advantages there, and it's definitely it's a fine line to try to straddle. There's a lot of nuance there, but kind of trying to do my best when I'm in both the Bitcoin and Monero camps and in the privacy camp, and trying to kind of not change narratives, but find the narratives that are most effective to help people find freedom if they're not quite ready to go all Monero or something like that.
No, and I think you do a better job than anybody in being diplomatic and being able to engage with hardcore Bitcoiners and get them to, dip their toes into Monero, and I get that, and that works very well. Arctic, you want to go ahead and give us your take, your response to what happened this week with regards to Samourai and what we saw with the Lightning Network?
Well, I'd like to go and start by looking at the cause rather than the symptom. And fundamentally, why is the government so obsessed with something like Samourai? And the real reason, in my view, is blockchain surveillance. And I'd like to sort of give you an example of why this really concerns me. And it's a follow-up on Seth's comments. Just before this talk, I'm in Pacific time, and I went down to get breakfast to the village. And I walked down, and I paid with cash for my breakfast at a coffee shop in Edgewood Village in North Vancouver. And I handed a $20 bill to the person who got my wrap and a coffee. And then I went over to Starbucks and got another coffee and a bag of chips. And I paid with the Starbucks app there, but I funded the Starbucks app with cash. Now, That is all very well and fine, very interesting. That $20 bill I gave at the coffee shop this morning, for all I know, 4, 5, 6, 2 hops, 3 hops could end up in the hands of some illicit actor who engages in some illicit activity. But that's not going to be traced back to me. Now, it came from my bank account. If I did that with Bitcoin, I wouldn't be able to sleep tonight. That's the bottom line. If you have Bitcoin and you got the Bitcoin with KYC and you want to move to Monero, the best way that I would recommend is you buy your Monero with KYC, because you want to get rid of that Bitcoin with KYC. The issue with Bitcoin is if you spend Bitcoin that you've acquired with a KYC exchange privately, you will be accused. It's a matter of if you do it regularly. You will be accused of a crime you had nothing to do with. Maybe you'll be able to fight it up, maybe not. You could be arrested, very likely, charged, have assets seized, have your life ruined. And the real fundamental reason behind this is blockchain surveillance. It's that simple. I mean, because that distinction between flow of funds and flow of control is deliberately not made. And what's really disturbing about this is that certain off-ramps Bitcoin that could be used to defeat blockchain surveillance by illicit people, if you actually read the indictment, the government alleges that $2 billion was moved through Samourai wallet, of which 100 million, 5%, was attributed to illicit activity. So the other 95% is licit. And this is a really scary part. Why would these 95% do that? Well, I would argue that one of the reasons you want to do that is to avoid being falsely accused of a crime you got nothing to do with. And this is the root cause of why the government is doing what it's doing. You talk to someone like, you have a senator saying that they need tools to spy on the blockchain surveillance tools. What she's really saying is, I'm going to protect the child pornographer. Now, it sounds really extreme, but think about this. If there's a crime who's committing a crime, would you rather have an unsolved case, or would you rather have law enforcement going after somebody who is innocent, thinking they've got the right guy, while the actual child pornographer runs free? That's what blockchain surveillance does. And this is why this whole thing is so dangerous. Now, when I look at Monero, I look at it from a very different perspective. First of all, I never got involved with Monero over privacy, and I've never been a secret. I got a bit over scaling. I think it's realistic, actually, with the analysis that I'm doing, that Monero could take on Visa, certainly within a decade, maybe considerably sooner than that, as far as transactions per second, on the main chain. In fact, that's what I work on. I just got the figures from the MRL cryptographers of about 3,000 bytes per transaction for full-chain membership proofs. Well, you crunch the numbers and you figure out what the internet so-called out there is, and you're dealing something that can be a mass payment system very effectively. And in order for that to happen, it's going to be like cash. You pay your $20 bill, and you're not threatened that you're going to be accused of a crime you're going to actually nothing to do by some for-profit company that has made a really good sales pitch to law enforcement that they can cut corners and that we're going to find criminals on the chain. And this is the whole thing about this entire scenario. So I kind of take a bit from view. I would definitely advise, if you have a KYC Bitcoin, you should sell it if you want to sell it or get out of it in a KYC environment. You definitely do not want to do any kind of private sales with it. And that's a really danger of trying to move into Monero privately from KYC Bitcoin. Because once you sell that Bitcoin for Monero, and you think you have privacy in Monero, and you do, what happens to that Bitcoin you sold to buy Monero? Is it going to be used for something illicit? Well, let me tell you something. I mean, if you wanted to do something illicit with Bitcoin, maybe buying Monero and then buying Bitcoin privately from a KYC source is a good idea, because now you can sell wild law enforcement or a wild goose chase after an innocent person rather than the criminal. That's how bad the situation is. And that's the scary part. That's the really scary part of all this. People think of Monero as, I would argue that blockchain surveillance facilitates crime. I definitely will. And sanctions evasion, and money laundering, and terrorism financing, and all these horrible things. Because it allows those people engaging in those illicit activities to divert law enforcement resources away from themselves onto innocent third parties that had nothing to do with the illicit activity. That's the scary part. And that lies at the heart of what's going on. Now, when you get to the details of the environment, of the indictment, the thing that struck me about this one and the Tornado Cash is this business of an MSB, money services business, without custody. And, this is an interesting legal question, but I really think that the government is really pushing the law to the limits here, trying to push this. And so I'm going to leave that topic from that side. But it really struck me that they went as far as trying to argue a money services business without custody of funds, which I find really very interesting, both in Tornado and in this case, in Samourai. And the big argument, of course, is that they're collecting the fees and that they're promoting it as a means of money laundering and so on and so forth. That's kind of what they're alleging. But the part about the money services business really concerns me, because they're really pushing the law there in doing that. So that's the area that really struck me about this case.
And that's a good segue for Mike and Arctic. Obviously, we'll go back to you in a moment.
Yes,
But let's bring Mike in here on that question, and any other thoughts Mike initially has about what he's seen this past week. But Mike, from a legal standpoint, the fact that the federal government is labeling Samourai as an MSB, money service business, even though they don't take custody of anybody's crypto, is there any precedent for that? Is there any potential legal justification for what they're doing, or has the federal government clearly crossed the line here in their indictment against Samourai?
Well, first of all, thanks for having me, Doug. I think Francisco pushed it really well when he said that the federal government is pushing the law to the limit here, because I don't see the grounds for that. In the Bitcoin fog case, part of the reason and justification that the government had for bringing that prosecution was the fact that Bitcoin fog was a custodial mixer. And Samourai clearly is not. And this is a completely different interpretation that was just applied in Roman Sterlinghov's case. And they're pushing the law to the limit here. One of the things that I also found interesting with registering as a money transmission business, money services business, is that it's actually really, really easy to register with FinCEN. It's kind of like a form, and you file it, and they're using the fact that people in the cryptocurrency space haven't, registered as justification for these criminal prosecutions. And like one of the things that maybe is going to happen is that you're going to see FinCEN get bombarded with applications from every single Lightning operator, cryptocurrency business, everything, and that's not going to be good for the efficiency at FinCEN. But I think that if they continue to bring these prosecutions, they're going to get bombarded with applications of people registering. I also think that it's kind of extreme, and it shows the government's hand a little bit that they went out and arrested Samourai. There was no need to do that. What they could have done is issued him a target letter, and he gets his lawyers together and they negotiate with the government. The fact that the federal government is arresting people like this in Portugal and in the United States shows that they're coming down hard with this prosecution mindset, and they're taking a very expansive interpretation of the law. And I think it's pretty scary, if you ask me.
Yeah, quick question that I had for you around that, Mike. Something that stood out to me is that in all the custodial mixer cases, they're always actually charged with money laundering, with running an unlicensed money transmission business. But in the non-custodial ones, Tornado Cash, Samourai Wallet, there's only conspiracy charges. Do you have any like top of the mind thoughts about why they don't actually charge them with doing the thing, but just conspiracy to commit the thing?
Because the money's never flowing through their hands, right? They might be arranging ways for people to transfer peer-to-peer, but they're not the actual ones holding the money. The thing is, the interpretation of what constitutes a money services business is pretty vague and expansive, right? So you could have like boat dealers who are taking cash to be money services businesses, but I think they have a big hole in their prosecution theory with Samourai for trying to say that there's a conspiracy for it, but they're not charging the initial crime.
Yeah, that's always confused me with these cases, is they in the indictment word it as if they have been doing these things, that they've been money laundering, that they've been running an unlicensed money transmission business, that they haven't done all these steps necessary, but then they don't actually charge them with breaking the law, but rather just conspiring to break the law, which is fascinating. I'm kind of curious if they're trying to just use that to expand the law on what a money service business is and what a money launderer is.
I think your intuition is completely correct on that front. You know, they call conspiracy the prosecution's best friend because they slap it on everything, you know, and it's very expansive and easy for them to acquire convictions with. You know, it goes all the way back to Al Capone. That's how they did stuff with him. It's just terrible what happened to him. I don't like the drive to prosecute. I don't think that stuff needs to be treated criminally. It could be handled in a much better way by the government. I think they're making a point by doing it criminally and indicting these people because they're trying to scare the community. And I'm hoping that this doesn't make people too scared to work in the privacy area, work in cryptocurrency, because, you know, ultimately I think privacy is a key component to free market capitalism. You know, if you're making a deal with somebody and they're able to look at your wallet and see how much money you have, you know, you just lost a bunch of negotiating and leveraging power in your business deals, right? So, you know, privacy goes hand in hand and is a key component of capitalism. And I think that when the government is trying to, override that and make privacy illegal, you know, it's gonna impact American businesses' ability to negotiate deals internationally.
Yeah, I think one of the more troubling parts of all this is, you know, when we see the indictment that came down from the feds. One of the things, and Seth brought this up, is they're showing tweets that were made, comments that were made by Samourai Wallet and TDev, and you know, when you read the tweets, actually, they're not even like that. You know, that precise in saying, you know, we're out here trying to build technology for criminals to use. It's like, but they're using comments they've made and trying to use that as evidence, circumstantial evidence to make the case that they were conspiring essentially to launder money for criminals. And it's really scary because we're all out here tweeting. We're all out here talking about these things. We're all making comments. And we're obviously not all conspiring here to create a system for criminals to launder money. That's very clearly not the case. So that overreach is like, I think, just slaps everybody in the face. Everybody that's into, you know, in this Bitcoin privacy Monero world. It's a real wake-up call, a shot across the bow for everyone.
Yeah, it really is. And I think there's a lot of First Amendment issues with the government's theory of prosecution on this front. When you're looking at code, I think code is speech. You know, if you're looking at the author of the Anarchist Cookbook, you don't go after the author and prosecute them for publishing the book because it's protected by the First Amendment. But here they're going after the people who are writing the code that then criminal users are using. You know, if someone builds a bomb, you're going to go after the person who builds the bomb, not the person who wrote the book on how to build the bomb. And I think that this is a big deviation from how criminal law has been interpreted in the past. And, you know, it goes hand in hand with a lot of other things that's going on in the federal government right now. And I'm worried about it, you know. I think that, you know, if you do have a money services business of any kind, cryptocurrency or otherwise, you should seriously look at registering with FinCEN, following all the protocols, doing everything that they're now prosecuting Samourai and others for.
I have a question here. The reason for the tweets being used as overt acts, is that a requirement of the conspiracy, Judge? That you have to have an overt act in order to be able to claim the conspiracy?
I guess it shows intent, right? It's showing intent.
Well,
that's certainly part of their theory, yeah. But I disagree with their theory. I don't think it's sound theory for prosecution, and there's some substantial legal issues here that, if are not handled at the trial level, are very interesting for appellate courts, because on this front there is a circuit split between the different circuits on how this question is interpreted. So, this is going to be a fascinating case.
Let me bring Bawdy up. I know he had some questions and he wanted to engage with you guys as well. Bawdy, if you're there, I'm going to bring you up. Sorry to just toss you up there like that. I don't know if you're ready for that. He may not be with us right now. Bawdy, if you're there, please feel free to jump in on the convo.
Hey, I'm here.
Okay. Yeah, go ahead, Bawdy. I think you had some questions for Mike, some things you wanted to bring up.
Yeah, I think Seth did a great job on kind of already touching on what is a money transmitter, right? What is a money services business? One thing that I saw reading the indictment is that it almost seemed like the government was trying to conflate the relaying of a transaction message, so like a signed transaction message. It seemed like Samourai was in possession of signed transaction message that they would then relay to the blockchain. It seemed like they were trying to conflate the transmission of that transaction with the transmission of money. I don't know if maybe you saw that or not.
Yeah, that's what I mentioned when I say, Bitcoin Fog with the custodial mixer. It actually took possession of the funds and then transmitted them to another party. You don't see that with how Samourai operates. And that's, I think that's a big hurdle that the prosecution is going to have to make it over if they want to successfully prosecute SW.
Yeah, I mean, I think you can technically think of Samourai Wallet's coordinator as an email service provider. It's very similar in that they essentially took signed messages, relayed them to other people, and when necessary, got signatures from a group of people. That's it. That's the entirety of how the coordinator functioned, and yet somehow passing signed messages either between individuals or between an individual and a decentralized network somehow counts as receipt and relaying of funds. It seems like an absurd jump from the previous requirement of custody and the other precedents that I've looked at, which is pretty insane. And I think there's a lot of value in us talking very clearly about how Samourai Wallet worked and explaining to just the regular person and putting a little bit of social pressure on this so people understand that this wasn't some person just collecting duffel bags of money and washing it, but it was someone who took a message and relayed said message, or helped a party of 5 people communicate together and then relayed their message without knowing where anyone's money was even going.
Yeah, I think the devil's in the details of this one. The problem though is that the prosecution has a bit of tunnel vision. They have a specific way that they're choosing to interpret this work, and they're doing it, in my opinion, for political reasons. And I would hope that the privacy community doesn't adopt that same kind of tunnel vision when it comes to thinking, oh, this is what is right and this is what is wrong, this is what's legal and this is what's not legal. Because what we can tell from this is that everything is in flux right now, and that's what makes it really scary for everybody involved, because we don't want to wind up like SW being arrested. It's also the reason I don't think the government should be arresting these people. I think that the best way to deal with it is to issue them a target letter and then negotiate and talk about it openly. I don't think that the prosecution has a full understanding of how Samourai Wallet worked and why it's different than, for example, custodial mixers.
What about in terms of Tornado Cash? So it seemed like the Tornado Cash indictment was like quite significantly fleshed out. The government really took their time to try and ultimately, it seemed like what they tried to do with Tornado was say, listen, you have an enterprise here that they developed the code. They intended to do this. They deployed the code. They ran critical infrastructure that was necessary to access the contracts. They profited from this business venture. This is clearly an enterprise in a centralized fashion that was designed to do mixing. It doesn't seem like they did all of that same stuff with Samourai in the indictment. So I guess really what I was hoping you could comment on is what kinds of similarities and differences do you see with the Tornado Cash indictment versus the Samourai indictment? And also, what do you think about the strength of the government's argument, just like in the context of a court, about like sort of tying that all together as an enterprise, as a whole enterprise unit?
Well, I think one of the things that tipped me off when I was reading the indictment for Samourai Wallet was the emphasis, like you brought up earlier, on tweets. On public statements. They took tweets that were, controversial, to say the least. Right? They're trying to frame this in a, government good, privacy bad kind of mindset. Right? And I think part of the reason they're trying to make such a black and white distinction on this is because the actual details and the actual understanding of how Samourai Wallet works, they don't have it, and that's why I think that, this is the case, and it will be a very interesting trial should it reach that point, because you're going to be able to discuss these issues and bring a lot of clarity to how the law is being interpreted and applied to these kind of companies like Tornado Cash or organizations like Samourai Wallet.
But in the case of Tornado Cash, you also had the same issue of custody, because the actual transmission was done by this automated smart contract, and the control lied with the individual users. So you still hit the same fundamental issue. The distinction in the case of is that they're using they are still arguing the conspiracy, and they're still arguing the fact that there's this enterprise, but the enterprise is not engaging in money transmission. And this is where they get into a pickle, which is the same thing as the argument that they're making in the case of Samourai. I think it's more obvious in the case of Samourai because the fees were directly collected and paid to developers. In the case of Tornado, you had a third party paying the Ethereum fees on behalf of the users, and then the developers getting a commission on this third party's fee. So it's a lot more indirect. But they're still arguing the same argument, that is, they're still arguing a business. Well, there is a business. It's just not engaging in money transmission. Now, a very interesting comment I think it might be is the argument that you're going to see Lightning Network is going to be considered an MSP. There's a way stronger case for routing Lightning for money transmission on that than there is for something like Samourai or because there what you're doing, you are literally doing the same thing Western Union did in the 1850s. I mean, you're shifting money from two accounts in order to transmit funds. So you're moving it from one side of the Lightning channel to the other side of the Lightning channel, and then you have to settle on chain in order to balance the accounts. Well, that's what Western Union did in the 1850s or whatever. They were sending by wire, but then they had to settle by stagecoach. So you're getting back in the same money transmission process. So Lightning, I can see it's a lot more vulnerable in theory than there's something like Samourai.
It is important to note, though, that you don't give up custody when you're sending funds through other Lightning nodes. Technically, you're sending them through an HTLC that can only be redeemed by the proper recipient, and you do not lose those funds until they've been redeemed by the proper recipient. So there isn't a giving up of custody, but it's a more gray area when it comes to custody versus something like truly like pure on-chain or something that's purely custodial. And I would say that Lightning is probably a little bit worse than Samourai Wallet, but technically is still not trusting custody with someone else, unless obviously you're using a custodial Lightning wallet, or maybe a Lightning LSP counts a little bit more, since there are instances where you don't actually have custody of funds until channels confirm.
I would push back against that just a little bit and say that you literally are sharing a UTXO and multi-sig with your counterparty, in which in a lot of cases that's an LSP, a Lightning service provider. And so, there is the possibility that under chain congestion, they might be able to steal your funds. And so, it's like you said, it's kind of a gray area, but it doesn't seem totally black or white to me in that sense.
That's the issue. It's precisely chain congestion versus the amount of money in the Lightning channel. And this is where you get into the question that I have a real problem with Lightning, in the sense that you are actually vulnerable to losing the funds due to chain congestion because the fee could be larger than what you have in the channel. And so that's where it gets really problematic. So you have to settle on chain in order to get out of the Lightning. And if you're in the Lightning channel, then you are policy. Well, my argument was that the relayer has two channels, and they basically are shifting funds from one channel to the other, which is essentially what an MSB does when they transmit money by wire, for example. So again, I go back to my example, Western Union sending money in the 1850s or something, or the 1860s or 1870s from, say, San Francisco to Chicago. Well, what are they actually doing? They're taking funds for an account or a cash deposit in San Francisco. They're sending a message to their office in Chicago, who then takes money out of their deposit and pays out the recipient in Chicago. Well, if they don't have another way to balance this, eventually, if it's unbalanced, so there's more money going from San Francisco to Chicago than the other way around, then they're going to have to settle that, quote unquote, on chain, which in that period would have been a combination of railroads and stagecoaches. So you still have the physical settlement to occur. And in the case of the Lightning Network, that settlement is on chain. If you disrupt the settlement process, then you're getting into a custody problem. And that's where the issue occurs, because now you have the cost of the settlement is more than the cost of the funds. Then you start getting into a problem with custody. And I think that's the issue with Lightning. So it is much more of a gray area, I would agree. Definitely there's something like Samourai, where you can just walk away from it. Somebody actually owns, and there's an interesting story behind this, and it happened at Monerotopia, of all places. I bailed out a Pixel maximalist who shall remain nameless and needed to pay for his meal, and he paid me in Lightning and didn't have any Monero left, which is what I wanted. And I haven't got around to selling it, and now I realize I better do something with this Lightning, or I might just lose it. Because I just got to find somewhere I can trade it for Monero and get rid of the thing because of the problems associated with it. And it was the Phoenix wallet or whatever it's called.
There's some fascinating issues here. Hey, guys, I got a 1 p.m., so I got to run, but, best of luck with everything for everybody. It's going to be real fascinating to watch how this all plays out, and I'm looking forward to talking to you guys again shortly.
Mike, greatly appreciate it. Thanks for jumping on today.
Have a good one. Bye.
Bye.
Guys, any go ahead, Bawdy.
One question that I think might be interesting here is that so Tornado Cash, they were holding fees, like they were doing the on-chain, they were holding or facilitating some kind of way for the people exiting Tornado Cash to pay the on-chain fees. And they were doing that, I can't remember, through relayers, I believe. So the question here, maybe a relevant question for a court setting, would be, was Samourai holding fees on behalf, like custodially holding fees on behalf of Whirlpool so that people could exit Whirlpool? Like, was there any custody in that sense, or was it all programmatic? I don't really understand how that works, but there might be some kind of vector for the government lawyers to try and argue that that was a custodial aspect, and that made them, a money transmitter.
Yeah, they'd never hold custody of any of the fees. So the way the fees work is they're paid when the round actually begins. So the new liquidity, the new entrants are the ones who pay the on-chain fee and pay the Whirlpool fee, and that only gets paid when that transaction actually goes on-chain. So there's no custody. The fees are not actually in existence until the transaction actually happens, which is obviously also important because if the round fails for any reason, there can't be like a refund system. It adds so much complexity. So there was no custody there in fees. They either took the fee when the round actually happened directly, and the on-chain fee went to miners, or they didn't take any fee at all.
But what happened with subsequent rounds?
The exact same thing. Existing people in the liquidity pool don't pay a fee, so their inputs get included in rounds as necessary to provide liquidity and to provide an onset for new users. And the new users continue to pay the Whirlpool fee and the mixing fee. Again, real time, just in time is probably a better term, directly to Samourai and directly to the miners in the same fee. Well,
so,
So
new
essentially-
entrants pay for old people exiting.
Yeah, there's no exiting. This is where there's a little confusion between like Tornado Cash and Whirlpool, where the use of the term pool is very confusing. In Whirlpool, there is no pool. Like your funds are in a pool. All that there is you have inputs that either are mixed, which you generally consider post-mix, or you have funds that are not mixed, which is pre-mix. And you've set them up to mix, which does mean you've already paid the Whirlpool fee, but they haven't actually gone through any Whirlpool round. They have no better privacy. But post-mix funds are yours. There's never a case where they're in a pool and you need to exit. It's just if you want to continue mixing, you can queue up those outputs that are already post-mix to be included in a future transaction. But there's no loss of control at any point in that either they're in a round so that there is a transaction on chain that's including them as the second or third or 30th mixing round for that output, or they're not in a round and they're just still in your control. So there's no exiting the pool like there is in Tornado Cash, where you need to be able to actually withdraw the funds from that smart contract to another Ethereum address.
But was the fee paid to Whirlpool and then Whirlpool paid the Bitcoin network?
No.
Or was so? This is the question: the entrant, did they pay a fee to the Bitcoin network, or did they? So they paid directly to the. So there was no custody of the fee.
No. So it's a centralized coordinator, but all that means is that they help new entrants find liquidity, find mixing partners who also have the same size incoming UTXO, and then they assist them in communicating, and then they publish the PSBT that contains the signed inputs, signed outputs from each participant. But they never take custody. What happens is that new entrant, to split it up, actually, the new entrant enters the premix portion of Samourai Wallet by paying the Whirlpool fee at that point and setting up the UTXO to be the right size plus mining fee. And then from there, the fee is paid directly to Samourai Wallet and to the miner in the same transaction. If you actually go look at an on-chain transaction, you'll see that happening in premix when an input is prepared. The Whirlpool fee is paid then. And then in the actual mixing round, the mining fee is paid then, just like any other. It's not paid by Samourai. It's paid by the 1 to 2 new entrants who are in each mixing round. And they build their PSBT collaboratively to pay that mining fee accordingly in a way that no one ever loses custody of funds. No one ever gives over any control to anyone else.
So basically, the fee is paid directly by the new entrants to the Bitcoin network. So there's no custody of the fee. That's the key point. Okay.
No.
So
that's the crazy thing. There was no custody. Samourai Wallet never had any ability to custody at any point in time, and they never had any ability to alter the flow of funds. They don't even know in Whirlpool which input corresponds with which output. It's a Xiaomi blinded coin join, which essentially means that they have no visibility as the coordinator for who's coming in and who's going out and the connections between the two. So there's so little control and visibility that it's absurd to me that they could be considered a money transmitting business or conspiracy to money launder. It doesn't fit any other previous definition, but that's where I think it's the government trying to use a low hanging fruit conspiracy charge with tweets that'll look bad to a jury and try to use it to push precedent forward and keep kind of building towards, even if you're not taking custody, but you're providing a service like this, you are a money transmitter.
Yeah, I think that's a critical point, is that this is the modus operandi of the government. They start with the easiest, lowest hanging fruit, the worst, the actual criminals, people actually doing bad stuff. So they take those slam dunk cases, and then their next round, and they'll do this hundreds of times over the course of years. They'll try and just barely move a little bit further on the edge of what the legislative scribbles might allow them to do. And they'll just keep doing this step by step by step. They'll establish precedent. And once it's established, then they'll take another step. This is them attempting to encroach onto a completely new version, a completely new interpretation of money laundering. I think it's funny in some ways, if you think about it, like the Samourai case that they have here seems weak even from within their own perspective, which is, probably why they didn't accuse them of operating an unregistered money transmitting business. They accused them of conspiracy to do that, which is so weird. Like that's double speak. But this is what the government does. Like this is their modus operandi. So the fewer options, the fewer vectors they have, the better. Like with Monero.
Charging people for conspiracy to do something is like pretty close to thought crimes. That's pretty close.
I mean, it's fine in the case where the person is actually committing a crime and hopefully is actually doing something bad. I mean, obviously they would say that Samourai is committing a crime here, but the very confusing part to me is they're charging them for conspiracy, but claiming that it's based on all the things that they were currently doing, but that the things that they were currently doing were not actually money laundering or running an unlicensed money transmission business. So it's like this weird idea that they wish they could do money laundering and running an unlicensed money transmitting business, but couldn't because otherwise they would be charged with doing those things. It really makes no sense. I'm hoping there's some fantastic defense lawyers that can tear this thing apart in court and hopefully get a positive precedent out of this rather than let the state own things. But obviously it's not necessarily a fair justice system, even if it's better than in many countries at this point.
But I would argue that the motivation is blockchain surveillance behind this whole thing.
Yes, yeah. Bitcoin is much, much easier to control and co-opt if there's no ability for the average person to gain privacy. That's absolutely true. And it removes the freedom money aspect of Bitcoin if there's no way to gain privacy on chain, which is, I think, 100% the goal because they know they don't need to shut down Bitcoin. There's no need for that. They can easily fold it into the legacy financial system, into people's 401ks, ETFs. There's no problem with that at all. Bitcoin as that is like fine. It actually benefits them. It's just another tax revenue. But it's when people can actually gain privacy that they can use it in a way that the state can't control or surveil. That's what scares them. And so that's why they're targeting that and not anything else at this point, even though likely it'll continue extending maybe even to self-custody in the future.
Well, yeah, the other issue there is that you end up with a totally insecure network as the block rewards for Bitcoin.
Potentially, but that depends on if it actually does become something where people want to use it as a settlement layer and banks actually custody it in the ETFs that we have now, that sort of thing. I mean, there's the potential that there's large participants who will be willing to pay fees because they're making enough money on top of it. But it is definitely a concern long term.
Seth, you brought up Wasabi and you were kind of surprised that they perhaps weren't the first to go, but perhaps the differences here for the reasons why a lot of people didn't like Wasabi. Wasabi was, my understanding, kind of right, like working with regulators, taking steps to ensure that essentially criminals weren't using their services. Perhaps that was the differentiating factor.
Yeah, I think so, because I think like we talked about, there's no current legal grounds. Again, I'm not a lawyer, so like take everything I say with a grain of salt, but I have thought a lot about this and read a lot about this. But it seems like there's no legal grounds for considering these things money transmitting businesses. And thus the charge of money laundering usually falls apart as well. So I think the goal here was not to get the thing that was being used for the most illicit usage, but the goal here was to pick the thing that was the easiest to get a good court case and get a precedent set. And I think you're right that's where the optics around Samourai Wallet look worse than Wasabi Wallet, even if the reality of Wasabi Wallet is, by many accounts, a lot worse. If the government actually cared about shutting down illicit usage, then Samourai Wallet.
Right, because
so
a lot of it,
weird.
Yeah, because a lot of it comes down to intent, right? So the argument is that the Samourai Wallet people had the intent to create this tool that criminals can use to launder money and that they would in turn make money off of that service. Whereas Wasabi had the intent to offer a privacy tool, but did not have the intent to allow criminals to use it. And they were, taking steps to avoid the criminal usage of their tool, I think is the difference, but the legal difference that might be made there.
I agree. The reason why I thought that once Tornado Cash went down and it seemed pretty clear that they weren't going to be able to get a not guilty verdict, I think there was even a motion that was denied today that I still need to read up on for the Tornado Cash case. But the reason why I thought Wasabi would be next was because Wasabi did the same thing that Tornado Cash did. They implemented something in their front end that is a KYC block list or a chain surveillance block list of known bad entities. That's it. I mean, there's nothing fancy going on about how they're actually protecting governments from these bad actors. But so I didn't think it was enough, and in the tornado case, it clearly wasn't enough that they did that, because even though that was the only real step that could be taken, they had done it, and it didn't matter to the government. The government just said that wasn't enough in the indictment. That was the TLDR of what they said. So I thought that wouldn't matter, but that's where I think optics here are maybe the important thing that the government wants, is less that it's the tool that I think they would probably prefer to have Wasabi down, since it is much larger, unless it's compromised and not actually providing good privacy, which that's just speculation.
Certainly the case. Could be the case.
Yeah, that's where it gets weird. I thought that Tornado Cash was going to set enough precedent that they would want to just go after Wasabi next. But yeah, I think it's Samourai said mean things on Twitter, so they're an easier target than Wasabi all it is, because Wasabi talks the right talk if you're trying to at least make it hard for the government to take you down. And I think there's something to learn from that, not to be like Wasabi Wallet, for sure, but rather to be wise about the way that we discuss these things publicly.
Yes.
Not because we want to use them less or get people using them less, but because we want to make sure that the governments in countries that at least have some form of human freedom, we need to make it as hard as possible for them to shut the stuff down that we're building. And if we talk poorly, if we choose our words poorly and we take bad approaches, we make it far easier for them to set bad precedents, to set the law through precedent rather than through legislation. And I think that's what's really sad about this is absolutely it's sad that the Samourai Wallet devs themselves are facing crazy jail time, that they're having to go through this. It's something that like myself and other people that I know who knew them well are like legitimately grieving. It's very sad. But I think the other piece that's really big for me is it's frustrating that they made it easier than it had to be to take them down. Again, not that they deserve to be indicted or in jail. I do not think that this is a valid or just case against them, but rather that they simplified the case for the government and gave them evidence that they can use in something like, especially if this goes to a jury, like talk to an average American citizen about Bitcoin privacy tools and show them what they said on Twitter and say that they did money laundering and we're supposed to have a license. And they're just not going to think twice. It's going to be really hard to get a fair jury trial on this because of the technical detail that's needed to understand why this shouldn't count as money transmission and money laundering.
Paper Vigilante, Seth, please talk about mining pools censoring specific transactions of Bitcoin this last year, please. I don't know why he's...
Yeah, I'm not sure. I can't think of any instances of that since the stuff that I wrote about in the fungibility piece on my blog a long time ago with Mara Pool doing that. As far as I know, there hasn't been any censorship by Bitcoin pools recently. I mean, there's a lot of concern over the centralization of mining pools because it seems like there's a lot more centralization than people think because the pools themselves are serving the exact same template, using a lot of the same timing. And there's a lot of concern that maybe there's really just a couple pools rather than 4 or 5 pools that have a large share, but that they're really just different names on the same backend. Potentially he's talking about Ocean. Yeah, that's probably it. So yeah, Ocean is this new mining pool that's run by people who think that they can clean up Bitcoin by choosing which transactions to not include in their block template, which I definitely consider censorship. I think the important thing to keep in mind is that censorship doesn't actually work because there's other mining pools that are just going to pick it up, and they're a very small mining pool. But it's definitely something that I've talked about at length, and there's been a lot of fighting over. But quite honestly, and I said this last night on X, just like so much time has been wasted talking about stupid little things. Like the whole point of this pool is to filter JPEGs. Like it's just idiocy. They say that their point is decentralization and censorship resistance, even though they're censoring. It's a whole asinine, confusing thing. But I've gotten the more I've been in Bitcoin, the more frustrated I've gotten that there is a clear need for progress and it's not happening. And there's so much infighting happening about this idiotic stuff. There's so much time of Bitcoiners wasted just trying to get people not to quote unquote shitcoin, or just talking about all the things that people shouldn't be doing or can't be doing or whatever. When there are needs for clear improvements, there are clear technical improvements that can happen on Bitcoin that have been proposed by good people, and that stuff just hasn't happened. So definitely a concerning a concerning thing and something I know has been heavily talked about in the Monero community over the years. This has always been the case. We've always been concerned that Bitcoin is not going to iterate like it needs to. And that's also why I tweeted out that I'm so thankful for Monero, because there's a clear, concise vision that we want to make Monero the best form of digital cash. And if something is improving the privacy, it's going to get done. We're going to do it. We're going to make it go live. We're going to do it safely, cautiously, with audits, etc. But the change that has to happen to give us the tool that we need for human freedom is going to happen. And so that's why I'm just eternally thankful for everyone working on Monero, like the fantastic stuff on full chain membership proofs by Luke and Justin that's happening with both those efforts. I think one effort already funded on the CCS and one mostly funded on the CCS already. And just really important things, because we still haven't hit the then they fight you stage in Monero. Obviously we've had delistings, but those are really simple things for the government to pull off. That's not complicated. But improving the privacy that's granted to every user of Monero is massive, and fixing the last kind of potential loophole for chain surveillance in Monero is a massive step forward. So I'm excited to see that.
It feels like
what do we think this means for Monero, guys? I mean, what should we be thinking about in Monero? Obviously, Seth, agree with everything you're saying, right? Monero is evolving, is pivoting as needed to maintain its privacy. It's upgrading, but with these infractions we're seeing that are being put forth by the government against the Bitcoin privacy community, what steps do we need to take other than improving our tech, right? Which we're actively doing. We're making it resistant to any attacks the government can do, but there's these other type of attacks that the government do, which is to start to accuse people of crimes. What are things that we think we need to think about or be prepared for Monero itself, Monero users, people that are building products for Monero, people that are offering services for Monero, things even like Cake Wallet, right, or other wallets that are out there for Monero. I mean, are there things we need to think about to be that we could possibly do to perhaps better align ourselves for the impending attack?
Yeah, I've been talking a lot, so I'll say something real quick and then I'll shut up so others can chime in. But I think the big thing for me is just understanding the distinction between Monero versus the things that are seeing an attack in Bitcoin. And one of the beautiful things with Monero is all of the privacy is happening at the protocol level. So if they truly want to prevent this service from happening, who are they going to go after? Are they going to go after miners and just take away people's computers? Are they going to go after developers, which is an entirely different and much harder barrier for the government to clear, because there's enshrined precedent for code being free speech. So they would really have to destroy the entirety of the Fourth Amendment to be able to go after developers publishing code. There's a big distinction. I think there's a lot more safety in the way that Monero approaches things from a regulatory perspective, which is weird to say because I think normally the attitude in the Monero community is like, don't worry about regulators, but there is a lot of benefit in the approach that's been taken. So the first thing I would say is just don't let this have a chilling effect. The things that are happening in Monero, the way that Monero functions, the way that tools like Cake Wallet function, there is nothing illegal. There is not even a step towards a precedent of making these things illegal, because they truly are publishing open source code. People are holding their own keys. There are not custodial Monero services widely used or anything like that. So we're in a good place right now. The main thing I would say is we just have to get Monero to be easier to use. We have to improve the actual usability of Monero, because there are people already flocking to Monero from this. I've already had many people on Twitter reach out and start to take the plunge into Monero. So that's the main thing. Welcome people, new people with open arms, educate them. And for those people actually building tools, make them easier to use.
My concern that I have, and I do have a couple of these. First of all, I basically believe the strength of Monero is the fact that we're not taking fees directly from the chain itself into development, into promotion, etc. That's a big issue. There are very few truly, like I went back to the 2013 FinCEN guidance on cryptocurrencies, which is actually very critical. And the key point is that that's a true decentralized virtual currency, and there are very few in the market today that meet that standard, and one will be Bitcoin, although that's debatable, Dogecoin, Bitcoin Cash, Litecoin, and then Monero. And the main reason is you don't have pre-mines, you don't have founders rewards, you don't have funds, all that kind of stuff. But where I see the risk, I mean, first of all, is starving the liquidity. I believe that Monero should be able to bridge between the traditional fiat banking system and the decentralized peer-to-peer cash. Just like cash, you should be able to go to a bank and withdraw cash and buy a cup of coffee. The same thing should be true for Monero. So I take a bit of a different view in the sense that there's nothing wrong with acquiring Monero with KYC. In fact, I've acquired almost all my Monero, these very rare exceptions, very small amounts with KYC. Because you can then, the nature of the privacy allows you to use it privately where it really matters. So that's where I see the danger, and especially I do see a danger if people have KYC Bitcoin and decide to get into Monero. There's a real pitfall there. And that's this business I'm saying about the blockchain surveillance attack. Because what really concerns me is, you've got KYC Bitcoin, you want to get into Monero, or I'll do an atomic swap, or I'll do a private sale. Well, you're really setting yourself up for a blockchain surveillance exit attack on Bitcoin if that Bitcoin ends up in the wrong hands. And that's a major risk that I see for people going into Monero right now, from users going into Monero right now. If they've got Bitcoin and the Bitcoin is KYC, really they need, the ideal thing to do is to buy Monero with KYC with that Bitcoin, as opposed to buy the Monero without KYC. And that's the key point that I want to say here. If you've got KYC Bitcoin, you really want to sell that Bitcoin with KYC, because there's a real serious risk that you're going to get implicated by these blockchain surveillance companies. And until the regulators figure out that how dangerous this is, and they haven't, this is a real risk that you have. So if there's one thing that I'm really concerned about is the person that comes into Bitcoin, into Monero, with KYC Bitcoin, or KYC Dogecoin, or KYC Litecoin, or whatever, or KYC BCH, Bitcoin Cash, and sell it privately without KYC, even though those transactions are perfectly legal, because they're under the thresholds and all of that, but they sell it privately for Monero. That is asking to get implicated in somebody buying Monero in order to get the Bitcoin that's attributed to somebody else to use it for some nefarious purpose. And that's the one thing that I'm really concerned about right now.
Kind of along that same thread, it might be useful to talk about if you wanted to chain hop through Monero to get some privacy. If you're trying to fill a void left by Samourai here, and maybe maybe have concerns about Wasabi. My theory on this that I've kind of arrived at over the course of a couple years here is that your best bet is to have a nice fat stash of Monero, and you spend that Monero. Like if you need to, so for example, we know Monero isn't necessarily as accepted in certain places as Bitcoin might be, or maybe Litecoin or USDT or whatever. So you want to have a fat stash of Monero, and then you want to spend out of that Monero. You want to chain hop from Monero to the thing that you're trying to spend, and then make that payment to whoever it is that you're trying to pay. What you don't want to do is take your Litecoin or your USDT, hop into Monero, and then hop right back out. There's so many heuristics associated with that could tie that to you. It might be transparent, especially if you're using some kind of centralized service provider. What you want to do with that Monero stash is as you spend it, you want to top it up at irregular intervals. So maybe you have a couple weeks, you're kind of spending. And then you say, okay, well, I need to top up my stash a little bit. Okay, well, I'm going to top it up for more than I had topped it up last time, right? So like, let's suppose you're targeting, say, 50 Monero. You don't want to just target 50 Monero all the time. You want to overshoot for 50 Monero. You want to undershoot. You want to top it up a little bit here and then a bunch over here at some random interval. You're basically trying to break these timing heuristics that could tie your transition from some surveilled chain into Monero. To me, this is your best bet if you want to try and use Monero for chain hopping in a privacy sense, right? Using Monero for payments. Obviously, your best bet, if you can, is just to use Monero directly as a payment mechanism. But if you're unable to do that and you need to make a payment, I think it's better if you have a stash of Monero, and it doesn't have to be your HODL, right? It doesn't have to be your store of value, as it's so called, or your speculative play on getting the most gains. But I do think that's your best way of trying to maintain privacy if you're going to do the chain hopping thing.
But how are you acquiring your Monero?
No, I mean, that's definitely not in contradiction to anything, to your recommendation that people get into Monero through KYC, which is it's like, that's so interesting how that's it seems contradictory, but you might be right that, yeah, you could be implicating yourself if you use KYC Bitcoin to get into Monero on the wrong systems. Now, if you have non-KYC Bitcoin, that's a perfect opportunity. Move some of that through a non-KYC system. Use BISC, use Haveno when it comes out, right? Move that non-KYC Bitcoin into Monero. That's I think should be fine, right?
That's a different situation, provided it cannot be traced you. But the risk that I'm talking about is the KYC Bitcoin, the KYC Bitcoin Cash, or the KYC Litecoin. If you sell it for Monero without KYC, in my view, that's very, very dangerous. So my personal preference, to be honest, I mean, I got out of these coins, is get into Monero. If you have to get into Monero with KYC, that's fine. That's not the problem, the risk that I see here. In fact, it may be, we're open about it. But it's that KYC Bitcoin that then gets sold privately. That's what really scares me. And that's the what really concerns me. So, so people are coming in from Bitcoin because it's, again, it's not, a lot of people look at Bitcoin and say, well, there's going to be a timing heuristic that you say, well, you bought Monero and then immediately sold it for this or sold it for that. But what I'm really worried about is you don't know what's going to happen to that, because the surveillance doesn't work. This is the central problem with Bitcoin. People like to call it a surveillance coin, and that's, in my view, an incredibly dangerous coin. There's a lot of privacy in Bitcoin, way more than people give it credit for. What you have is very ineffective surveillance. You have what's called proof of. You're tracing funds, but you're not tracing control. So what you're doing is you're saying that tracing funds, and then you end up in some illicit action, say child pornography is a good example. Something really awful, because the more awful it is socially, the more applicable this question is. So you trace the funds there, but you haven't traced control. You've traced funds. If that got sold ahead of time, that person is framed for a serious crime they got nothing to do with. And the worst case can even be, you can even create clustering. And if you understand, I mean, I have actually, this might shock people, I'm not saying this publicly, I'm actually certified in blockchain surveillance through CipherTrace. That was one of the things that came out of the Stonehouse thing. And I understand how a whole process works. In fact, I aced the exam. No, I'm serious. I got 20 right. It's about detail, and you hear the thing, and there's a demand for this, and you look at the software, and it's all basically similar. It encourages you to stay in that channel, so it doesn't encourage you to look around. You trim everything else, and it encourages you to stay in that channel to do the investigation, and so it's very tempting to end. Oh, I've got something. And the something is, I've got child pornography at the end of this thing. So this person at the beginning of the chain is therefore guilty. If you miss one hop, if you got one of these hops wrong, you've got the wrong person. But the system doesn't encourage you to really look into that. And that's why it's so dangerous. And this is what really so scary about it, because at the more, I think a lot of people in law enforcement are being very, very naive. They may be seriously concerned about social child pornography, and that's a legitimate thing for them to be concerned about. But what they're doing is they're relying on tools they don't understand. They don't understand the limitations, and they're promoting them. And in fact, those tools actually facilitate the very crime they're trying to prevent or deter, because of the fact that you're now sending the guilt to someone who's totally innocent. And that's where the danger is. And so I think in this kind of an environment, people suddenly going to move into Monero or Bitcoin or the Litecoin or there's a real risk there that you go there with the best of intentions. You're not intending at all to do anything illicit. Your objective is, quite honestly, totally illicit, totally above board. And your reason for going to Monero could be as simple as because Bitcoin fees are insanely high, which is right, and the thing doesn't scale, and it's got all sorts of other problems that got nothing to do with privacy. But the minute that you sell that KYC Bitcoin and you don't sell it with KYC, you are setting yourself up for this attack. And this is, this is what really scares me about it, because if you look, that's the thing that really scares me. And I think a lot of people in law enforcement, and I think a lot of people in regulators and in governments need to wake up to the fact that they're playing with fire here. They're literally thinking that they're fighting crime, but in fact, in many situations, could end up encouraging the very crime that they're trying to fight. And this is not a trivial problem. And it's very self to blame and to say, oh, it's them versus us and all that kind of stuff. I think we're going to be a bit more practical about it. Says, well, wait a minute, are those tools really helping you fight crime? Or are they actually allowing criminals to essentially send law enforcement on a wild goose chase? Because there's limited resources in law enforcement. So if you are a criminal and you want to tie up law enforcement pursuing innocent people, that's a criminal's advantage. And this is this issue. You sell the Bitcoin, okay, can be traced back to you. That Bitcoin ends up in some illicit activity, and the worse the illicit activity, the more effective the attack works. Then you've got an innocent person framed on the criminal act, while the criminal has successfully acquired something that's better. Instead of having an unsolved case, who bought the child pornography, now you have somebody you can point to, which happens to be innocent, but now you have somebody who's point, which is not the person who's actually bought the child pornography.
Arctic, let me just interrupt real quick, because I think this is an important topic, because I think you keep saying it over and over again, but I don't think it's really spoken about enough, or whether the community has kind of come to consensus on what are the best ways for people to obtain Monero. Obviously, number one would be mining it, right? Number two would be would be my list. Number two would be buying or selling goods or services directly for it. Number three would be somehow obtaining it with cash, like through local Monero. But after that, I think most people would then say, swapping into it anonymously using another cryptocurrency. And you're saying, no, that's probably not a good idea. And then after that, I would say, purchasing it with KYC on Kraken, right? If I were to kind of order things. Should we be do you agree with that basic order I put out there? Or how do you see things, and how should people ideally be obtaining Monero in your mind? And then Seth, I'd love to hear your take and Bawdy as well.
What are you starting with? That's the first question I need to ask. Are you starting with a bank account?
Your regular Joe that isn't in crypto yet, right? So
okay, so you're starting with a bank account, open an account on Kraken, buy the Monero with KYC, and be done with it. Seriously. And if that's what I would recommend. Then you get into fancier stuff. Okay, I'm going to get a job, and this is great and interesting. But practically, mining is not the most cost-effective way to get Monero, unless you happen to, depends on where you live. If you live in Canada, in some parts it's cold. Is it cold? Yeah. Is it hot? No. Mining, it's got its plus and minus. Alaska's a great idea. But there's a lot of this idea that you got to acquire Monero privately. I don't buy that at all. I think we need to be looking at, if you got money in your bank account, you want to buy Monero, go directly from your bank account into Kraken, buy your Monero, keep records for everything, pay your taxes if you sell the thing, and you'll be way ahead of the game. Then getting yourself into all this. Now, if you've got Bitcoin, or you've got Litecoin, or you've got Dogecoin, then for sure that's the way to go in. If that Bitcoin, Litecoin, etc. was bought through KYC. But if you're an average Joe and you have access to buying it through a centralized exchange, with KYC, buy a Monero that way.
And
That's the simplest.
And your thought is basically to the equivalent of if you it's like obtaining cash.
Exactly.
Like you want to obtain cash. It sounds like nice obtaining it anonymously, but when you go to use it, or there's this point at which you have to prove as to why you have all this cash, you need to show some proof as to that it came about you in legal means.
Well, that's exactly the other issue. I mean, I literally ran into this with Monero. I mean, I'm really glad I acquired my Monero with KYC, and I could prove how I got it. And I kept all my receipts, and I kept all my records. Because you know what? If the thing moons, you're going to have problems if you want to buy a house with that Monero. Because how do you prove how you got it? I much rather go in, buy the Monero with KYC, sit on the thing. If you want to use it for illicit purposes, whatever, like you acquire cash, now you've got a track record. Someone goes, where was your source of funds? Well, this is where I got it from. This is the price I paid for it. Here are the records. And this is what I've done with it. And the other thing that really gets me is people say, well, I'm going to evade taxes. The worst thing you could do is do that, because now you're setting yourself up for another criminal attack. But also, if you're so obsessed with not paying taxes, you're going to end up not making money. I mean, this is what I think a thing with people that are so obsessed with taxes, is that what ends up happening is you end up doing stuff to lose money so you don't have to pay taxes. Well, I'd rather make money and pay taxes than be broke and not pay taxes. Sorry, but that's... I'm serious. I mean, let's get real about this. I mean, you see all these plans and convoluted investment schemes to save... And the minute they say the word tax, I say, okay, you want me to lose money, so then I can write it off in my taxes, because this investment really doesn't make money. No, I want an investment that makes me money. And sure, I'm going to have to pay taxes as a result. That's great. Rather than this thing. So I think what we're kind of thinking it backwards. But when it comes to the average Joe, go open an account at Kraken. This is why liquidity is so important. And it's no different than then you go to the bank and you want some cash and you want privacy. I'm moving away from cards for a variety of reasons personally, but I go to the bank and get my cash. It's that simple.
Yeah, paper vigilante. I don't see any problem acquiring it privately since there's nothing violent with that. Yeah, I don't think any of us would disagree with you. I think we all, everyone in the Monero community has that philosophy of people should have the freedom to transact. Obviously, between any crypto into Monero, from cash into Monero, from Monero to gold. But Arctic is kind of giving some practical advice given the situation, and that we are still living under the control of the state, and they we want to play it smart. But
it's not how you get the Monero; it's how you sell the Bitcoin.
Mm-hmm.
That's the issue here.
I have a question or a thought rather related to what Arctic has said so far.
Mm-hmm.
So of course, trading your KYC Bitcoin Litecoin for Monero and then that ending up in the hands of somebody later down the road, that's an issue. Alternatively, the other way, so let's say, which is something I've done several times, I'm trying to buy something from this merchant. They only accept Litecoin or Bitcoin or whatever, and I use my XMR and I swap my XMR for Litecoin. Potentially, I could see a scenario where that Litecoin that I swap to ends up not being good or ends up being used also badly down the line. And if I'm buying something that's being shipped to my house, it's got potentially my name and my address sort of loosely associated, not necessarily a KYC sense, but at least in terms of the merchant. And I guess it depends on what service they're using to accept that, if it's more of a centralized system or a decentralized one like BTC Pay. I'm just curious about your thoughts on that.
Well, here's the question. I mean, if you're buying from a merchant where they know who you are, you have receipts and all of that, and then the merchant gets attacked, then you have at least some defense. Say, I just bought this asset at this store, and this is what I used it for. So you have a positive defense. You have an alibi basically against the attack, because you acquired that Bitcoin Cash or that Litecoin, for example, which probably wouldn't be used Bitcoin because of the fees. But if you want to do that, but let's say you bought Litecoin or Bitcoin Cash, and you bought, and then you use that Bitcoin Cash at a merchant. Well, you better keep your receipt to show that this happened. I mean, I created a scenario in exactly that with Bitcoin, where the person ended up being, they didn't keep the receipt and they couldn't prove it, and the merchant was basically threatened, held up, and they transferred the keys over to a criminal. And they ended up being in the scenario, they were assessed, accused of an act of terrorism. Because the issue is, if you're going to sell that Bitcoin or that Bitcoin Cash or that Litecoin, do you have proof that you sold it legitimately, legally? That's the real question that you want. So what is it that you're going to buy with it? And do you have proof that you sold that thing legally? That's the
basically
question
proof that I've swapped XMR into whatever else.
No, that's not the issue. The issue is proof that whatever else, which is supposedly traceable and it's not in reality, you swapped it for something legal.
I see.
That's the step that you got to make sure that you have control over. It's the selling of the Bitcoin or the Bitcoin Cash or the Litecoin that you need to protect yourself with. That's where you pick up the risk. You also pick up the risk of getting bad Bitcoin or bad Bitcoin Cash or bad PCH that then says, well, no, this stuff is bad. That's the other risk you run. But it's how you sell it that is really the issue. It's how you sell the Bitcoin Cash or the Litecoin or the ETH, or although ETH probably might be the safest in this because of the sheer size of the thing, but it's how you sell those things. And then you have proof that it was a legitimate legal transaction.
So the biggest concern is just when you sell it mainly on exchanges, centralized exchanges.
No. If you sell the Bitcoin on a centralized exchange and you have KYC, you're fine.
Oh, I mean, if you have KYC Bitcoin from an exchange and then swap it outside of that.
Well, that's one example. Or if you've acquired Bitcoin, and let's say, for example, it can be traced to you some other way, a camera or something or whatever. And I mean, the ways that can be traced to you might shock you. I mean, this is an example would be you got it out of a .NET market and the .NET market was seized and you did nothing illicit in the .NET market, but then they can trace it to you that way. That's happened. So, you got to look at what's going to happen, how you got it. That Bitcoin, you then send it somewhere and you can't prove where you sent it. And it becomes illicit. That's where you're at risk. So it's that Bitcoin or that Bitcoin Cash or that Litecoin or Ether or whatever it is that you sent. And it can be attributed to you somehow, and you spend it, and that's after spending, you can't prove that you spent it. It ends up in an illicit area. That's where your risk is.
Arctic, what's in the hypothetical situation where Monero, all the legal on-ramps, all the sanctioned and approved on-ramps, registered on-ramps, at the point that Monero is delisted from all those, hypothetically, what would you say? What would be your ideas in terms of getting into Monero in that case?
Cash.
Just cash, like local Monero, Liberty conferences, friends, or maybe like selling a product or service from Monero.
Yeah, I mean something that's legal, that you can legally sell from Monero, that you're not breaking the law, and that because it's not the buying the Monero that's the problem; it's the selling the other cryptocurrency, and that's the point that I'm getting at here. It's not about what you. It's the Monero is not the issue; it's the other guy. That's where you're getting into trouble because that's where I've seen this. I mean, you're talking. I mean, evidence that, like, somebody puts money into a down a market, takes it right out of it. It gets proven that because the DNN market gets seized, that exit from the DNN market was attributed to somebody, but that's not what the person was accused of in this case. The issue was, this is when it offer all these hops to this other illicit activity. So even what you might think is not KYC can be KYC. That's the other thing to bear.
What do you think about kind of a roundabout way of getting in? So let's suppose that you're a normie, you've got you've got your retirement savings, you want to drop, say, 100,000 into Monero. Kind of a roundabout way, if Monero was delisted from all of the exchanges
everywhere in the world.
Yeah, hypothetically, yeah, if it was everywhere in the world that it was delisted, or most places, right? Most Western nations.
Places. Okay, can you actually go somewhere else and buy it legally?
Hypothetically, maybe it would be hard. Isn't like if you're an American, it might be hard to move 100,000 to some other jurisdiction to buy Monero legally, and maybe I don't know. Maybe you set up a corporation. But I was thinking you could just buy gold. You could get into a gold bullion vault, and there's at least Money Metals, for example, allows you to move directly from gold into Monero. I don't know if that was like a year or two ago, so I haven't checked lately if they're still doing that.
Well, gold is, as long as you got fungible gold, and you bought it with KYC, yeah, it's fine. You could actually buy gold. Gold is a very interesting play in this. I mean, because you can buy it and it doesn't have that negativity associated. You can buy it and you're allowed to withdraw it as cash, but it doesn't have the negative connotations of large cash. So if you buy $50,000 worth of gold and have it shipped to your home, that's not bad because it's gold. And it's legitimate.
My proposition being that you could go from cash or bank money into gold and then go from that gold into Monero.
I don't see why not.
Yeah, that might be a possibility for those of you that are maybe if you live in New York. I remember, Doug, you were asking me a few months back, like, what does someone in New York do, right? They can't get on Kraken. They've got bank money. Well, you might send that directly to Money Metals, get some gold in a bullion vault, and then flip that into Monero after some period of time.
Yeah, that's a possibility. The other option, which can be really interesting in that case, is to mine it. I mean, if you're in a cold climate, New York gets pretty cold in the winter. Get some mining rigs, get some computers, and mine the thing, and stay warm that way. So I mean, that's another sort of legit way because now you're basically offsetting your electricity cost, so you can do it that way through mining.
Somebody was actually, I think, in the comments talking about what about mining? What about mining? I've mined a lot of XMR in the early days, but I don't have anything to prove it. Arctic, what would be your response to that? I mean, is it mining kind of the ultimate?
Keep all your records of the equipment that you bought and all the receipts and so on. I mean, that's kind of what you want to do. And this is the hydro. This is what I spent and so on and so forth. I mean, I remember having to get all my tax records out of Mt. Gox days before the thing was shut down. I got my records because I bought some Namecoin and BTCE before it got shut down. I got all the screenshots for that. So grab all your records. Mining, again, if you can make a reasonable case of, I mined it. Did you declare it in your taxes when you mined it? That's a good one because that'll give you your proof. So those are the kind of things that I would do. One of the things about people don't realize, and this has happened with Bitcoin, the guy who bought the pizza, if you think of the Bitcoin pizza, the 10,000 Bitcoin pizza, okay, so he's got 10,000 Bitcoin. Does he have proof of the receipt of the pizza that he spent in order to get that 10,000 Bitcoin? Because if he's going to sell it, someone might say, what's your source of funds for that? How did you get the 10,000 Bitcoin? Now, because of the case of Bitcoin, you say, well, this is when I got it, this is what it was worth. But there's an argument there, that you capture this asset when it's really, really low. It suddenly balloons in value, and something that was $40 becomes hundreds of millions of dollars. I mean, what we're talking 10,000 Bitcoin is what, 600 million?
Is it? Yeah.
Yeah. Now, did you have the receipt for that pizza? Because that's your source of funds. When you want to sell, when you buy something with your 100 million, 600 million Bitcoin, with a Bitcoin.
It's a lot of capital gains.
It's a lot of capital gains, but my point is you have the receipt for the pizza. I mean, that's my point. I mean, it's an extreme example.
I just want to interrupt too because I want to get Seth's take on this before we move on.
Yeah.
I think after we could let people up on stage.
Yes.
If you guys can stick around a little bit, that'd be great. I know Seth, you might be busy, but if you can stick around, that'd be awesome. If you could just engage a little bit. But Seth, I wanted to get your response to the initial question of how would you currently recommend for people to best obtain Monero? Like, what kind of order do you give things?
Yeah, I think it's a little bit excessive to be worried about the source of funds in all of these situations. Like, I think the main thing to keep in mind is that there is still a burden of proof on the government. Obviously, there is the Bitcoin fog case, which is the only real case of someone being charged when it doesn't seem likely that he's the actual person who committed the crime, but rather that he sold Bitcoin peer-to-peer and that the Bitcoin was used after that. So I think it is important to protect yourself, but I think the main thing is if you're buying Monero with Bitcoin peer-to-peer, just make sure you keep the keys for that wallet, and then you can prove that the transaction left your wallet. I mean, that's one thing that they couldn't do in the Bitcoin fog case because it was a very old wallet that he hadn't kept around. So I think often that would be enough to be like, hey, like this was my wallet at that time. You can see all the transactions. You can see that transaction that I sent out of this wallet. And unless for some reason you were sending them to yourself and acting as both sides in a peer-to-peer trade, which is a whole nother story, you would have at least proof that those funds left, even if they weren't KYC'd. I definitely would continue to advocate for people to avoid KYC whenever possible, not necessarily from an avoiding the government perspective, but from a privacy perspective of you don't want any central entity to know how much cryptocurrency you have generally. It's not unique to Bitcoin or Monero. Mostly because that data will inevitably be leaked or hacked at some point. And so someone will know that X person at X address bought 1,000 Monero over the span of 5 years, and they're going to know where to go knocking with a $5 wrench. So that's the main thing for me. I think the places that I would recommend people to actually go to buy Monero are generally, if you're coming with fiat, do local Monero. If you're coming with Bitcoin, do local Monero. You could do BISC, even though Bitcoin fees have been up and down a lot lately, so sometimes it's very expensive. Or Trocador.app is a fantastic instant exchanger as well. But I think that the main takeaway from Arctic's point for me is that you should just keep records. Keep the seed phrases that you use. Don't just delete them and move on, just in case something happens with those funds, and you need a way to be able to prove that. But I don't think it's worth sacrificing your identity to a central entity to be able to have this proof in this hypothetical future trial that you're a part of. It is possible, of course, but that's where I think just on-chain proof is usually going to be enough. And that's something that was not existent in the Bitcoin fog case, which was a big problem there. But yeah, I think those are the big ones for me. Local Monero is fantastic for fiat or Bitcoin to Monero. BISC is still a good tool if you're willing to pay a little bit higher in fees. And then Trocador.app is a good instant exchanger.
You're muted, Doug.
Tux, I think now would be a good time to do viewers on stage.
Yeah. I guess it's two very different perspectives, and that's why we have a community the way the community is.
Tux, you want to go ahead and we'll do viewers on stage? We'll get people up here that want to talk.
Yeah, let's do it.
It's the Viewers on Stage segment. It's that time where we invite you, the viewers, up on stage to comment on anything you've heard so far today, ask the guest a question, or maybe talk about one of the news topics. Come on down.
All right, looks like we just got to a red surfer in the backstage. Posted the link in the chat, guys, if you want to come up. Oh, I just got Slave Blocker.
So I have 3 questions real quick. So first one goes to Tux and the Monerotopia team. Why don't we hear the segments in the StreamYard anymore? We used to, but we don't any longer.
What do you mean?
Like I don't hear like when he did the guest segment section. I don't hear it in the StreamYard.
That is
I
a
hear it.
browser side issue. It's not playing the audio properly. Sorry.
Okay.
Not sure
That's
what's up with
fine.
that. I've had that happen before when I've uploaded a clip to play. Like if I, for some reason, with the way the audio is encoded on the dev report clips I uploaded, I can't hear it, but everyone else can.
Okay, because we can hear it like on the YouTube stream and everything, but we can't hear it in the StreamYard. So the next question goes to Arctic, and my question for him would be, like, how many hops does chain analysis take before they consider something like if I sell some Bitcoin or Litecoin or whatever, does it take 10 hops before it's considered just not me? Take 20 hops? Do they say it doesn't matter? It doesn't matter how many hops. It could be 10 million hops and it's still linked back to me. Like, what's the kind of statute of limitation on that? And the final question would be for Seth, and it's why stay in Bitcoin with all this stuff going on? I know that you kind of pivoted a while back from Monero more toward the Bitcoin side for maybe a job or something like that. And why? And are you considering coming back more into the Monero? So Arctic first, and then Seth, I think.
Okay, the number of hops in chain analysis, they closely guard that information. They went out of their way to not reveal it in the trial of the Stilinoff. In fact, it weakened the government's case quite a bit. They protect that very, very carefully because they know that's the weakest in their system. So to be honest, I don't have an answer to that. It is heavily protected. In fact, this is one of the big issues with blockchain surveillance, is that they don't want you to know the number of hops so that they can keep you guessing. That's the whole point. When I designed the scenario for the incrimination scenario, I designed it in such a way there was like less than one hop. There was one hop. That's the whole point, is you're not supposed to know that. Only the insiders are supposed to know that. And that's what makes blockchain surveillance so insidious.
The really funny thing is 0 hops is too many. It's so easy to spend Bitcoin or anything out of somebody else's wallet if the device or the person becomes compromised. Like, the entire premise of 1 hop, 2 hops, 5 hops is irrelevant because you can falsely implicate somebody so easily on 0 hops. The entire premise, it's like you still end up in a situation where they have to prove that the actual individual is responsible for the crime. The blockchain surveillance is completely worthless as far as it is circumstantial at best. But that the thing is they're not looking for proof. They're looking for a victim, right? Like,
Correct. Yeah. And you're totally right. I mean, what you're describing is that you implicate the person by transferring the private key off chain. And so it's 0 hops. And that's exactly the scenario that I created in 2021 for the European Commission. When we submitted in the Monero, where I had literally this happen. The person pays this merchant, and the merchant then gets shaken down by a criminal, and the criminal gets the private key. They don't move the funds on the Bitcoin blockchain. And they do exactly the scenario you're describing. So 0 hops is enough to implicate somebody. Absolutely. And therein lies the problem. The difficulty is that I sat through a trial where they implicated someone and is sitting in jail right now precisely on blockchain surveillance. And that's why I'm so concerned about this.
I don't want to interrupt the
one thing that I wonder. One thing I wonder if they do, so like we know in Bitcoin that most wallets have a distinctive fingerprint. And so it might not be as much about the hops, it might be about the fingerprint of the wallet. And saying, hey, okay, we think this is the same person. They still have the same funds. Okay, it's been hop, 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 but it's all been through the same wallet. So this is probably still the same. Like, I bet they use heuristics like that.
Oh, they do. How good they are? They do all sorts of things. Everything from, there's all sorts of hidden heuristics that are not disclosed that are proprietary, and they argue that they can't disclose them because otherwise the bad guys would take advantage of them. And that's exactly, whether it's of wallet fingerprints, whether it's money that was taken from goodness knows what. I mean, from mysterious sources, you would be surprised.
It's one of the things that I'd point out, though, is obviously what both Arctic and Seth are saying are valuable information for protecting yourself and your family from keeping the eye of Sauron off of you, for sure. And they're different threat models for different purposes, and you should definitely equip yourself. But we don't want to lose the trees through the forest, or however you're supposed to say it. The real issue here is there are a group of people who have taken it upon themselves that they have the authority to send people to jail for speech. And no matter what you do to protect yourself personally, it doesn't change the fact that there is a group of people that have declared war on your right to speak freely and interact with people legally now, which whether it's legal or illegal is almost of no consequence, because there is now officially whether it be rogue or the intentional or a part of a larger conspiracy, there is an entrenched bureaucracy in the most powerful empire in the world that has taken it upon themselves to say, we will put people in prison right now for their speech, and then we'll have a kangaroo trial over it as well. And we're not even going to reveal to you what the crime is. It's a crime of a theoretical could have happened to be a crime, maybe if you look at it, through a pair of prism glasses or whatever. Like they have declared war, and we are now the enemy. The free human being is the enemy.
Well, I mean, that's very correct. I mean, but the what's driving this, I would argue, is a profit motive, a very serious profit motive in it. In that they have basically said to law enforcement, when I sat through and I was doing the ciphertrace training, you could see there's a lot of interest. This is not something that they're selling something in reality is too good to be true. But from the perspective of a law enforcement officer, they are basically being told, hey, buy our software and we'll tell you where the criminals are. All you have to do is give us all this money.
And then Seth's question about, is he going to come back to Monero now that this whole Bitcoin thing has happened with Bitcoin privacy tools? Because I know that he pivoted from Monero to Bitcoin privacy for maybe a job or something like that.
Yeah, I'm happy to answer that. I think the only thing I note is just that I didn't leave Monero, but rather I just shifted focus and have continued to advocate for Monero, and give feedback on Monero services and tools, talk to people in the Monero community. It's not something like I just disconnected or that sort of thing. But yes, I saw that I could have an outsized impact in the Bitcoin space versus the impact that I could have in the Monero space. And I also felt that there were a lot of people who had stepped up and filled in the things that I had been doing in the Monero space really well. People like Doug, people like Tux had stepped up and started to do a lot of the education that I had been doing. And so I felt like there wasn't as much need for me in the Monero community as there was to have a voice for privacy in the Bitcoin space. So that was a big need that I saw, and I'd already started talking more about Bitcoin before that. And then also, obviously, there was a job opportunity to be able to work full-time in the cryptocurrency space, with Bitcoin being at the center of that, but not the limit of that. I will say, with all of this craziness and with the shutdown of big tools that I thought were essential to being able to use Bitcoin for freedom, I mean, there is certainly a part of me that is thinking more about what that means as a privacy advocate and not just as a employee or something like that, but rather shifting more towards Monero, even if someone prefers Bitcoin as an asset, but understanding that Monero is a far better tool for privacy, and that the only real ways to achieve privacy on Bitcoin have summarily been crushed. So there is a big part of me that's considering more deeply what that means for my efforts and how they should be focused between Bitcoin and Monero. I don't think Bitcoin is beyond hope yet, but this is either it's kind of a turning point. It's either a wake-up call for Bitcoiners and things actually change, or Bitcoin is dead as a freedom money. and we'll have to move on to things like Monero, and everyone that cares about freedom will have to move on to things like Monero. And so that's why I also love to just stay engaged with the Monero community, still donate to CCSs, still engage with a lot of the devs, because the things that are happening in Monero are vital. I'm still a Monero user more than I am a Bitcoin user. And I'm thankful for everything that's been going on. So kind of hard to like really unpack that publicly. But yeah, I think that a bit of me is thinking more about how I focus, or how I balance my focus between Bitcoin and Monero.
And then one final question for Arctic. I think this would apply more to him. What happens when the government finally figures out that this whole blockchain surveillance is snake oil, and that they've arrested thousands or tens of thousands or hundreds of thousands of people or whatever on false charges? They have to let them all out, or are they going to try to keep them in jail for something they didn't do? Like, eventually this is all going to come to light that this is snake oil. And what happens then?
Well, this is what I'm wondering what's going to happen. There's going to be all hell to break. Because basically they will turn on these blockchain surveillance companies. That's what I think is going to happen, that they've been had. I mean, who wants to be told you've been scammed? Even if you're the most powerful government in the world. Because realistically, this is exactly it. If they have been led to believe that you've got to listen to some of the sales pitches that they make. Once they figure that out, there's going to be all hell to pay. They're not going to be happy. Would you be happy if you were scammed?
Whoa.
Yeah, I mean, this is essentially what I'm saying. In my opinion, I believe that the U.S. government, the U.S. taxpayers, are the victim of a major fraud with this blockchain surveillance stuff. And they've been led to believe that it works for something it doesn't.
Hello, how are you all? I wanted to, this just baffles me. Do you hear me good?
I can hear you.
Yes, go ahead.
So this is from Hagakure and from Yamamoto Tsunetomo. He was a samurai, and he wrote the Way of the Samurai, which is the book Hagakure, and there is a quote which I want to cite. Even if it seems certain that you will lose, retaliate. Neither wisdom nor technique has a place in this. A real man does not think of victory or defeat. He plunges recklessly towards an irrational death. By doing this, you will awaken from your dreams. So it is inevitable that these, I don't know like what they're doing, but I would argue buy BTC and LTC, which is tainted, and then distribute it through the John Does and Jane Does, and let them sell that tainted BTC on exchanges, on KYC exchanges. Which is a second. And that's it. So the John Doe then says, I sold it. I don't know, like, that's my argument.
Slave blocker, the same exact philosophy, but I think would probably be a little bit more explosive. Pardon the pun with your icon there. But and it ties into what Bawdy and Arctic were saying earlier. The best course of action, and I'm watching all of these laser-eyed do-nothings, right? Like, someone somewhere should go fight this, who's certainly not me. Hold more BTC, pump my bags, bro. Like, okay, ignoring all of those people who are literally just, I would be surprised if any of them even have any BTC. But the point is the real legal argument here, if you want to like shut it down completely, yes, you could try to fight it of like an us versus them thing, but honestly, you need to get another bureaucracy to go after this bureaucracy under color of law. So in other words, you get the government to fight the government over the fact that they are allocating powers to themselves that have not been given. Okay. So I call this the CCP battle, right? So in other words, the best way to fight the Chinese Communist Party is the entrenched hierarchy of the Chinese Communist Party, right? They spend way more resources fighting amongst themselves than they do even oppressing the people, which they dump tons of resources into, right? So, for example, the EPA and the DOT fight all of the time over who gets to enforce different kinds of traffic laws regarding trucking. I see it every day. You do the same thing with like all of these different 3-letter agencies, right? So basically, do you have the legal authority to enforce these rulings? Do you even have the legal authority to create these rulings? And not only does that slow the role of the agency, but the other thing is now the people responsible can be held criminally liable within the government. And so whereas people talking about like we need to start a legal defense fund, no, because that's going to rally the government amongst itself, right? And there's a reason why they're trying it in the jurisdiction they are. There's a reason why it's this vague nonsense about a conspiracy to think about committing a crime and all of that other stuff. What you want to do is you want to try to get the different levels of the bureaucracy to argue over who even gets to have this power, who even gets to enforce such a power should it even exist. That is so you slow the role of the entrenched bureaucracy by getting other entrenched bureaucracies to make the claim that it is in fact them who are supposed to have the right to make this enforcement. And the other agency is acting in color of law to try to pretend like they have it.
So like the SEC versus the CFTC with the whole like Ethereum thing?
Exactly. And a little birdie told me that may have been the strategy all along for the freedom fighting cause, right? Because here's the thing. So in a world where the majority of the crypto populace, they're not crypto anarchists, their number go up Lambo when please, they're fools, right? They don't actually care about anything that we care about, right? They want to pump their bags, retire early, and go to Thailand for some ladyboys or whatever. That's what they're all about. Okay. But the other thing is, if you spend your own resources on a defensive posture, you are not spending resources developing the technology. You are not spending resources growing the circular economy. You're throwing your resources away to get back on the hamster wheel that's already completely controlled by the enemy power, right? But if you get the entrenched bureaucracy, because remember, they just print money into existence, right? And then that is stealing purchasing power from the productive capacity of other people. That's stealing savings and investment capital from everybody equally. Okay. So they can only do that so much before there is no purchasing power for their primary weapon. So as long as they are fighting amongst themselves, then what you have done is you have slowed the progress of the tyranny, and it buys time. And then the other thing is, there was a really important question posed on crypto Twitter, which is, what are we doing now to protect our devs? What are we doing now to protect our, and on it goes. Well, the first thing you have to do is you have to figure out what role you're playing in this. Okay. So if your role is, you're the quiet, productive type that is working on spreading. I'll use Doug as an example since he's a public figure, right? So he's number one, spreading the message. Number two, increasing adoption. And then number three, he's like kind of the charismatic face by which he can explain to the plebs what this technology is, what it does, and what it has to offer, right? Now, on the exact opposite side, like I already expect to spend at least the last half of my life.
Guy.
Yeah, I expect to take the last half of my life sitting in a jail cell. Like, honestly, I'm kind of surprised that I'm not now. And it's something that I've already accepted. So for those of us that are the loudest and most aggressive posture, right? We should be, as I put it on Twitter, we should cloak the devs in a sea of hatred for the enemy. And what I mean by that is you need to make it impossible to even get to the underlying architecture of this system without first doing battle with somebody else. So if you are that soldier, right, then you need to be such an aggressive, immediate threat to the establishment that getting behind that line for the bureaucrats to get behind the enemy lines of people who are literally just writing code, right? The Luke Parkers of the world or whatever. They're going to face like more immediate threats by going through a 10-year court battle and all of this other stuff from those who are building the circular economy now, right? From those who have already worked to peg Monero to the price of gold. So in other words, find your role, find your position in the cause for freedom, all right? And either do it loudly or do it subtly, depending on what is the most effective method for you to push the cause of freedom. I hope the people that needed to hear that are getting it. But then as far as all of those BTC maxis that are starting to wake up to the reality of the situation, right? Yes, you can do your legal defense fund or whatever, or you can just focus on protecting your mad gains or whatever. But focus on getting the bureaucracy to fight itself. Focus on targeting with criminal charges the people who are responsible for advancing this regulation, because you need to make a point to go after the actual individual. We keep talking about it as this bureaucracy over here did this. No, a guy at a desk is responsible for this. Focus on getting him in jail so the next guy at the desk is afraid to take the case. Like, you have to go after the people, not the agency. The agency is just going to dump more money into the same garbage because they don't care. But if all of a sudden they are likely to end up in jail for pretending to have the authority, you have changed the rules of the game, just like they just changed the rules of the game on us.
Well, there's a couple of things I'll comment on that. And the first part about Bitcoin, I gave up on Bitcoin in 2015.
Me
and
too,
I gave up on Bitcoin in 2015 for reasons that had nothing to do with scaling. Sorry, with everything to do with privacy. There's a very simple reason that its design does not permit worldwide adoption. So it's not a threat. It's a threat. What makes Monero a threat, and we can say this is very simple. You could actually scale Monero to Visa level of transactions, I would say easily within a decade. That's, based, for example, on the latest figures that I got on the size of the full share membership groups, which is roughly about 3K, 3,000 bytes. So, and we're dealing with, US basic change in technology. People don't realize how much the technology changes. This is a technological issue. So this is the first thing. The value of these currencies, whether it's Monero or Bitcoin, or ultimately fundamentally are driven by their use in commerce in a decentralized fashion, or you could call it by the cypherpunkness or the freedom aspect or whatever. So you have in the case of Monero, you have an asset whose value proposition is the very freedom that a lot of people here cherish, the freedom to transact privately, and particularly the freedom also to transact at low fees without censorship, and so on and so forth. So that's the value of this thing. What we have in Bitcoin is, and I hate to be blunt, but Bitcoin is essentially, there's nothing behind, because the minute you take out the decentralized nature of the network, there's no fundamental value there. So whether you are an individual or whether you are an investor in Wall Street, you've got to recognize the fact that these things have value precisely because of its decentralized nature. So there's a fundamental... Sorry?
I just have to say, Arctic is over here throwing down the freaking gauntlet. Go ahead, sir.
Okay, so the gauntlet that I'm throwing down when it comes to Bitcoin is it's not going to have value if it's just sitting in an ETF, because its purpose, its real reason has failed, and it's failed at what it actually was designed to do. So if you're at Wall Street, I mean, I'm much more in agreement with, say, Warren Buffett, who looks at this thing and says, what does it do? And he's right. What does it do? If you take away that decentralized use, what exactly is the point? It's not a store of value. I'm sorry. And I am throwing down the gauntlet on this, because my argument is that Bitcoin is not fundamentally doesn't have the value that it's being quoted at, because that cypherpunkness, or that freedom, or whatever you want to call it, decentralization has been taken out of it. Monero has a fundamental value in as much as it stays true to its purpose, which is to be a peer-to-peer cash that can be used on a worldwide basis. I mean, all you have to do is look at the mathematics of the equation of exchange, which is typically applied to Keynesian economics, but can be applied to as a hyper-Austrian currency, which is what Monero and Bitcoin are. What you have is if you increase the size of the economy, if you have a fixed number of coins, which effectively Monero has because of equilibrium between the tail emission and lost coins, then the only way that you can increase the economy is by creating deflation, massive deflation, which is appreciation of value. So you're not going to have, if you got massive adoption of freedom-loving people trading among each other and running an economy, that has to drive the price up. And that's what gives the fundamental value. And the fundamental value arises from the fact that it lessens the transaction cost, because you're removing the friction of censorship that's inherent in the fiat system, or at least you're removing a friction of censorship in those aspects of the fiat system where censorship it was. Like if I have a credit card transaction and you're a relatively wealthy person and you go to a high-end hotel, the cost of that transaction may be 0.5% by the time you figure in the rebates and all that. But on the other hand, in the same country, if you're a poor person, and the cost of that transaction could be 50%. So what you're doing is you're getting.
Hey, do you mind if I add to this before you keep going? Because and I wish I was a little more prepared to say this, because I might get the history a little bit wrong. But what you're describing, there's a perfect example of that in, I think it was called the Missouri land speculation bubble. So basically, there was a whole bunch of quote gold-backed bond-style receipts that were used to finance the investment of development along the Mississippi River right after the United States got the Louisiana land purchase, if I'm not mistaken. But basically, there was a certain amount in circulation. And then the receipts outpaced the reserves. And then when people found out that the speculation on the land had outpaced the actual value of the land, people started, at first, they were buying up the gold receipts to cash out the gold. Okay. But then eventually people would not take the gold receipts for the actual gold. And so basically what happened is it was Gresham's law on steroids, okay? And it mixes in, I keep bringing this up week after week, but it mixes in with the dollar milkshake theory, where basically because you can print dollars, you can mess with the price of Monero in reference to dollars, because you can use dollars to drive down the price of Monero until you can't, right? And it's the same idea right now of, so Monero has a certain amount of volume, a certain amount of liquidity, but people keep pricing it in dollars. So you can always use dollars to manipulate the price of Monero until you can't. And if you're using both dollars and Monero to buy real stuff, in this case, it's the land, right? In the Mississippi case, but there's other examples. It's just, this would probably be the easiest one to point to. So the land has a certain value. People realize that that value has been hyper speculated upon, and the land is not worth as much in either dollars or gold in this case. Now we have the same example where Monero is being valued in dollars, but it's being used to buy real things as well. Dollars have a certain value even in Monero, but it's also being used to buy real things as well. Well, the dollar is being inflated, right? And so are other currencies. So other currencies are collapsing, and then their value is now moving to the dollar until one day it doesn't, right? And it's the same with some people. When they need dollars, they sell their Monero until one day they are not willing to take dollars from Monero, at which point the supply and the demand issue with Monero, just like there were Roman coins that had silver in it and there were Roman coins that had less silver in it, and people would start trading the high silver for a larger quantity of the low silver until the selling pressure of the low concentration of silver drove the value of that silver to the value of the silver in the silver plus the cost to melt it down for real silver. All right. The dollar, maybe tomorrow, maybe in 20 years, whatever. But the reality is they will only be able to peg Monero to the dollar for so long. And I think that like at the tippy top of all of these organizations that value the dollar but also have access to the printers, this is becoming an ever-growing concern for them, that the longer they play these games, the sooner they're going to find themselves in the position where people aren't willing to peg their real value to the dollar anymore, right? And that's the double-edged sword of taking Monero off of exchanges and taking Monero out of circulation, where the more they do this, the more they're depegging Monero from the dollar. And then people who actually want Monero are going to have to use real stuff. And all of a sudden, the value of Monero is pegged to something other than the dollar. Already in Alaska, Monero is more pegged to gold than the dollar. Okay, and that's because it already de-exchanged, right? It's like nobody, even though the exchanges that you can use, nobody will use them anymore.
Well, you could peg Monero to gold, and because of its history. My argument about the equation of exchange with Monero is you're pegging Monero not just the dollars. Dollars is just one item you can buy with Monero, but to it a basket of goods and services that reflect the Monero economy, which could be gold, which could be property, which could be cups of coffee, which could be, that's the distribution of the value of Monero you're pegging it against. You're not really pegging it against one specific item. So my issue is I'm looking at Bitcoin versus Monero. So I'm sort of looking at the dollar as a side show here. And what I see is that Bitcoin has no fundamental value because you've taken away its ability to act as a transactional currency. And Monero, you need a whole bunch of things to make Monero work as a transactional currency. Privacy is one of them. Although I would argue that privacy can be retrofitted onto a chain a lot better than scaling. And in fact, Monero is proof and parcel of that itself. I mean, but Bitcoin has failed because of its inability to scale and because of an intrinsic design with the falling block rewards and a whole bunch of technical issues, which have made it impossible to become a major currency. And when El Salvador tried to use, for very valid reasons, tried to use Bitcoin in order to address friction associated with remittances, which in the case of El Salvador, that's about 25% of the GDP of that country, they picked the wrong chain because it's cheaper to transact in Western Union or than it is to transact in the Bitcoin blockchain. So Bitcoin has failed in that level. The dollar itself has its own problems, which I don't see that as the main driving force in what I see is the flipping of Monero over Bitcoin, because in a cryptocurrency, you have to have a fundamental value, a fundamental reason why you want to use that, and that is that you lower your transaction cost.
I would even add to the fact that the transactional utility of the dollar, it's being robbed in all kinds of ways. Like getting it in and out of the country is becoming more of a pain in the ass, or like removing other countries from the SWIFT system. the dollar is also, or at least the Orwellian lizard people overlords that reign over the dollar, right? They are eliminating its transactional utility as well, just like with Bitcoin. Only Bitcoin is happening faster because of its technical limitations, but the dollar is doing the same thing. And it's funny because out of one side of their mouth, they talk about how it's still the reserve currency, but out of the other side of their mouth, the reason why they need a CBDC is to reduce the friction of the transaction of the dollar, right? So even the people who reign over the dollar with an iron fist are acknowledging that they're doing the same thing that you're saying about Bitcoin right now, which is there is friction in using the dollar. And, Doug has talked many times about just doing business, legal, perfectly legitimate business, like with going to Mexico. It's so much easier to use Monero than it is to use the dollar already for legal, legitimate business practice. When people figure this out,
Well, the issue there is the spread between in the Mexican example, is the spread between the dollar and the Mexican peso, which is the same issue that I would argue going to Europe. It's a spread between the Canadian dollar and the euro. And this is the friction associated with electronic payments versus cash payments, which in fact is significantly higher. Like, for example, if I pay with a Canadian credit card in a US gas station, I'm probably going to pay a 5% charge on the exchange rate, and the gas station is probably going to pay another 3 or 4% or 3%. If I were to use US dollars in the form of cash, which I can buy right here in North Vancouver, maybe 2%, the friction has gone down from 2% to 8%, and with Monero you could trade it, you could get it down to maybe 1%, basically because of the friction that's imposed by the payment processors and by the credit cards and so on. So that's where you get into that scenario, is that the spread of buying and selling Monero can be a lot less than the spread of buying fiat currencies, and then you have this friction issue, which will initially essentially cause the price of Monero to go up. I mean, that's basically the argument. But that's more intrinsic with the friction costs in payments, in my view, as with the long-term devaluation of the dollar, because in many ways, the dollar does a really good job at maintaining value over a relatively short period of time. If I'm going to, I earn, let's say, $3,000 in a 2-week period, and I spend that $3,000 either in goods or services, or I go and buy some other long-term assets such as crypto or gold or real estate or whatever, I don't really care what the value of that $3,000 is going to be 10 years from now. I mean, it's not relevant to me. I've already spent it. So why would I care what it's worth? So the dollar seems to be, at this point in time, doing a decent job of maintaining its value over relatively short periods of time, which in that sense is kind of its strength or whatever. Now, what you're saying is very true, is that the dollar is being weakened through sanctions and through international liquidity, or still the best of the whole lot.
One of the things to add to that too, Body Accelerationist there actually mentioned it a couple of episodes ago. The Austrian economists failed to predict the results of rising dollar interest rates. And my case, and I didn't put it nearly as eloquently as you just did, was the fact that, for one, America doesn't save money anymore. We're a debt-based society. Very few people even hold dollars in a long term. In fact, rich people store their value in assets. Poor people don't have dollars to save, right? So when they started jacking up interest rates, all of the Peter Schiffs of the world, I mean, bless his heart, he tries really hard, but they were saying that, apocalypse now is upon us because there's no way that they can have interest rates at a certain level. And the only person that I heard who was even remotely public was Bawdy saying, by the way, all of the Austrians got this wrong, and we should really revisit our models, right? Because it's true. And what you just said was what I believe is the reason why, because nobody cares once they spend the dollar how much purchasing power it preserves. Nobody cares. And not only that, but the economy doesn't hold dollars anymore. The only people who do, like banks, they get to use the Fed window to match the interest rate as it is now. They don't care. And so the Austrian economic model broke down when hyper fiat currencies became a thing, right? Like they're still basing it on stuff from, you know, the Bastiat era, you know, in the 1700s or the 1800s, right? It's well, I hope he chimes in because I'd rather hear it from Bawdy. But
I mean, even worse is that the person that sells their dollars for some kind of asset, especially an asset that's in high demand, they not only do they not care about the value of the dollar after that, they want it to go down. They want to see their asset pump. Like, I want to see my assets pump. Who doesn't want to see their assets go up in value, right? Who doesn't want to feel like
for
they got
real,
something
dude.
for nothing? So it's like this fiat system and all this printing sort of traps people into that mentality. And there's no better example of that than the laser-eyed maxis.
Yeah, but
that's exactly what I was gonna say. That's like they feed off of this stuff.
But they don't have a fundamental value in their asset. That's my point. I mean, if you buy gold with dollars, you're going to get a fundamental value. If you buy real estate with dollars, you're going to. My view, and I may sound very controversial on this, but I say you're far better off holding a mix of dollars and Monero than you're ever going to holding Bitcoin. Because I see Bitcoin as something that's about to collapse. I mean, it has to collapse fundamentally. There's no fundamental value in this thing.
Arctic, as I told you on IRC, what I expected to happen is that, like, it's not going to live on the transaction fees. So the price of Bitcoin has to go up, way up, such that in dollar-denominated terms, the transaction fees sustain the miners, and after that, the price of the fees will go up in terms of Bitcoin, and the price will tank, and that's the end of the story.
Yeah,
I'm not a trader. Does that make sense?
Well, let's take the dollar out of the equation and look at Bitcoin versus gold, and then do the analysis.
Sorry, come again?
So let's take the dollar out of the equation and look at Bitcoin versus gold.
Okay.
If you ask a question of fundamental value, I would argue that Bitcoin has to crash.
Well, for me, the value lies in its utility. So
Because
the
there's no
BIS does not
utility to
need Bitcoin. So the thing has to crash because there's no one transacting with it. I even hear from what Bitcoin did from McCormack that they are going to be altruistic miners. What is
both
this
of you
about?
have actually already been proven right, because it maybe Bawdy can pull up a graph of it, but Bitcoin versus gold, the transaction cost death spiral actually began just before the halving, and there's no way out of it. The value of Bitcoin against gold is going to continue to collapse just as a function of the cost of doing transactions when denominated in dollar terms. And they're making the same mistake that the Austrians made when they were thinking about, how the dollar has to crash now because X, Y, and Z. Well, now, which it turned out to be not true. And it's the same thing with Bitcoin and gold, where they think that, the price must go up because X, Y, and Z, when in reality, the reverse is true, because if you price it in gold, the transaction fees are going to become more and more untenable to the point where Bitcoin versus gold is going to come out on top. And there goes the last premise of their argument. Oh, save in Bitcoin because it's the digital gold. They've undermined their own argument, because if that utility dies too, which it will, then they have nothing. They're holding a worthless bag.
Well, assuming that the elites that transact don't need it. If there are lots of islands with elitarians transacting, then it might. It's a question of probabilities, right?
Could you grab a chart of gold Bitcoin price, Bawdy? I don't know if that's something you can do right now, but that would be interesting to see because I'm just guessing. But
Yeah,
Arctic, how about this? How about this argument? You know that Saylor would make that it's actually digital property, and it's
What is
perfectly
digital property?
perfectly traceable digital property, Bitcoin, right? So
Bitcoin? But what's its
perfectly
purpose?
traceable digital property that people can have agreed is a store of wealth where they can keep their money, where you know exactly who the owner is at any point in time, and
Why do
there's a
you?
registry for it.
Why are you holding Bitcoin if not to sell it to the greater fool? What's the use case for it? Once you take out the cypherpunkness, once you take out of the equation this idea of a decentralized currency where you eliminate transaction costs, I mean, you go down to what is exactly is the point of Bitcoin?
I feel like I should
Perfectly
offer some pushback here.
traceable digital property. It would be the
What,
you know, is there value?
Yeah, exactly, and there might
what's
be a
it?
use case for that. There might
Right.
be a use case for a surveilled, limited
Right.
reserve
That's
asset type
exactly
of thing.
right.
But why not
Like-
just go? Why don't you? Why not use gold? It's got
There's
lower
properties
friction.
there's properties that Bitcoin has that gold doesn't have. Like we don't really know how much gold China has. We can estimate, we can make estimates, but we don't really know, right? So the other thing is that there is the truth about that supply cap. If governments, if large institutions are willing to prop up that ecosystem and willing to prop up the mining and willing to integrate it, it could very well be possible that Bitcoin does have some properties, especially in a digital sense, right? Bitcoin does emulate a lot of the properties that gold has. It's not as scalable, it's not as fungible, it's not as private, but governments don't necessarily care about that as much. So it emulates enough of the properties of gold that it could be useful within that context. And if governments and big institutions want to prop it up, it seems to me likely that Bitcoin's price could actually continue being fairly high. I think that's a reasonably likely outcome.
This is the case of it, but who's propping it up? I mean, government's going to keep funding Bitcoin. Is that what you're saying?
Yes,
Well,
exactly.
there's
I'm saying that if BlackRock and governments and a bunch of institutions with enough money and their fingers on the money printer decide that, hey, Bitcoin is useful for them in some sort of context, even if it's useful in the context of just keeping some sect of the crypto community away from actual digital freedom money and locked up into the promise of eventually one day scaling, like even that's a useful use case for them.
Well,
the other thing that I'd point out with this too is you have to think of things in terms of the mining reward for transaction fees versus the concept of dust, right? So you know, the idea that a certain quantity of a UTXO, if it's lower than the price of the transaction, those people are basically locked out of trading it at all. Not to mention that it gets the chance that it gets lost. But here's the thing: if from a banker's perspective, right, like. So basically, just imagine you're a blood-drinking vampire. You know, your entire purpose for existence is to leech off of humanity in the most depraved way ever. And you're a banker, and think of it like the boom and bust cycle that's regulated by the banks right now. They can crank it up to 11 because you can lock anyone out with the dust mechanism who is sitting on small quantities, right? Or the pores, right? And then at the same time, you can crash the cost of mining by first jacking up the cost of mining. So if you dust out transactions, then the reward for mining a block goes way down relative to the cost of mining a block. So then the next round, the cost of mining a block goes down, which opens up all of the dust, which then increases the block reward. So you can use the boom and bust cycle by just trading it from the left hand to the right hand, right? So BlackRock moves it from one ETF to the other ETF that is under their management at a very specific time, right? And they can basically control the price of mining. They can control all of the pores, whether or not they're allowed to make a transaction. And then they can take money from the poor people when they try to do the transaction, when they try to get out, because they're finally not locked out of trading, right? So this is like, the thing is all of the things that people are terrified of with the CBDC, if you own enough Bitcoin and you have enough stake in the mining, whether it be through ESG laws or whatever, right? You can do more damage to the free humanity with Bitcoin than you can even do with a CBDC, because now you even have the ability to pretend like it's not your fault. Oh, we were just, doing what we do, making markets, whatever. So the thing is you can use the dust mechanism of Bitcoin to absolutely destroy all of the poor people who have a little bit of Bitcoin. And then you can take all of that value on the other end when they try to get out, and then you can pump the price on both the mining side and the Bitcoin side, and you're unaffected by the swings of the price if you're holding it and not making the transactions. Bitcoin has become the ultimate form of tyranny if they can just take the last few steps.
It's also should just be noted the simple fact that dust, like by increasing the level of dust, you have decreased the ability of people to actually exit that system. So they put money into the system, they got dusted, and now they can't exit unless they basically want to pay exorbitant miner fees. So that's actually kind of a way to prop up the price. Like it is a factor.
You can control the supply. It's not 21 million. The supply of Bitcoin has never been 21 million. It will never be 21 million. And it is not fixed, because the thing is the price of Bitcoin controls what the supply actually is. And until people figure that out, and the other thing is just the idea, it's 21 million Bitcoin. Well, it's like infinitely divisible. So it's like when people say, that one dude on Twitter was like, are you part of the 31 million XMR, blah, blah, blah. Like he thought he was taking a jab at Monero for the idea of the supply cap. And it's like, dude, you are literally the dumbest sheep of all if you think that the supply cap of Bitcoin is 21 million. And if you think the actual supply of Monero in 100 years is going to be 31 million. Okay, because if you don't understand equilibrium mathematics, you have no idea how to even calculate supply. If you don't understand what transaction fees do to this supply and the value of the Bitcoin you hold, if you hold less than the dust threshold, you hold 0 Bitcoin. You have none. It's like, and they can make the dust threshold of Bitcoin. They can make it 5, 6, 7 Bitcoin. You don't have 5, 6, 7 Bitcoin, so you have no Bitcoin.
ArticMine,
because you can't move it. But here's the thing: you got to look. If you look at the Bitcoin fee and reward, it's wildly fluctuates. It's not stable at all. In fact, what we're seeing right now, just after I was just looking at the chart. And it went from a fee and reward of somewhere about 75 at the peak recently, which is actually the highest, down to 20. So the fee and reward in Bitcoin is incredibly volatile. So I'm not so sure that you can get out. I mean, what you do is if you're sitting on the dust, you wait till the fee goes low enough, and then you sell your dust for something else and get out of it. I mean, I had
massive loss on top. I mean, you lose.
Well, well, I mean, it depends on, but I know your point. I bought in 2019. I bought $100 Canadian worth of Ethereum, and I saw this fee issue. Wait for the fees to be down. I sold it for Monero, and I didn't take a massive loss. I made money on the thing. So it's not. But what you're saying is its use of validity is gone because it's trapped in the dust and you can't move the dust because it's the fees are too high. So essentially you're locking out all these people, and only the people that have large quantities of it.
Are you guys familiar with the concept of a white elephant? Because Bitcoin has become a white elephant. It's one of the few cases where its value is actually negative, if you understand the concept of a white elephant. Okay,
because basically the cost of the negative value is because you have more cost to move it than it's actually worth.
Exactly.
Well, the thing
that's the argument.
the thing of being digital property, I was thinking about this that week, and I wanted to tell a little story, which is my father told me this story when he was in university. There was this myth that a student, it's about engineering, he wanted to pass the subject of bridges, and he had an oral proof. He would go to the drawing board and he had to draw the bridge of Lisbon, like the Ponte sobre Tejo, the one, and he started drawing it, and the teacher, in front of all others, told him, this was like 40 years ago or something, told him, "You're not drawing the bridge too good. It seems like you're a little bit tired. So perhaps you try next semester." And the guy was upset like hell and went back home. And next semester, same story. He started drawing the 25 April bridge. And the teacher turns to him, tells him the same thing. He goes back home, comes back next semester, and a astute student, tells him, "Draw on scale." And he had already made the central parts of the bridge, and then suddenly he starts drawing the bridge outside of the drawing board. And then the teacher says, now you're drawing at scale, and he passed the class. So how I envision Monero for me, and it's great that we have diverting opinions upon it and that we all have our branches of interest in it, although sometimes it's kind of sour to be on the wrong battlefield, and I feel for the people that are going to jail or not. So the thing is that how I envision it, if I would have got hands on a shitcoin, I would fork Monero, and I view it like 1,000 nodes around the world with lots of CPUs and lots of hyperlink optic fiber. And you
so
saw
like a nodo is what you're saying.
Exactly, almost to the.
Why your
I
nodos?
mean, Douglas for president, and Douglas deserves a platinum statue on Times Square, not just now but forevermore.
A fucking uranium statue. All right.
So I continue. So the thing you all probably thought about this ArticMine is that if you are talking about 50K transactions per second on a decade, then that would be like, I should have written this down. How should I explain it? Like, basically, after each halving, you need to make a transaction to get it over the horizon, because the chain will be there will be a tail trimming every one after the halving, different
The
in
halving
Monero,
on what?
which would
halving in Monero.
No, he's saying the Bitcoin halving.
No,
The
I'm not
Bitcoin
saying
halving.
the Bitcoin halving. I'm saying this new shitcoin that I would fork from Monero would cut the tail of the chain. It would shift the genesis block. And because, imagine, this is a DAG, right? We have lots of outputs today, let's say from 2017. One output in amongst 300 outputs, which is the only output which can be spent, because the others are all spent, and we have to keep that, all of us. That's like saying you have a bank account in your pocket. It's a Swiss bank account, but I'm forcing everyone to sit on it, even though there is only me having that output. The other thing that is the good thing about this, and I will continue, is that you would trim the chain, and you would take out the code that is obsoleted. So you would also not only get rid of the outputs that are not to be used anymore, that only serve as decoys. You would get rid of the lost coins. You would trim code that is not being used, which should be deprecated. And then the only drawback that it would bring is that after the halving, which is the tail trimming, you would make a transaction to the new part of the chain, because the next time the trimming happens, your inputs are no longer valid. And I think this is hugely important. That's why BTC is not property, because a vector, it doesn't scale. Even if it's a block time of 1 year and it is just a bit that you are holding on against infinity, you are not going to scale nothing. So if we have 50,000 transactions per second, we have to move the thing along. This was really
what you're forgetting,
Thanks so much.
in the analysis is what is the cost of storing that information. This is where a lot of people really get into trouble, because you've got to look at what is the cost of storing the information, what's the cost of transmitting the information, and so if that price of that cost keeps the technological trends as you have, you're not going to care because it's so cheap. It doesn't matter that you're holding this information, and that is essentially the issue. If you look at the cost of whether it's the bandwidth, or whether it is storage, etc., this is plunging, and it's going to plunge regardless, because the amount of resources go down. And people don't realize how much it does. I mean, if I go and say, for example, at a 50% growth a year, 15 years, so you do a 1.5, and you exponentiate this to 15, you actually get 1.5. And you exponentiate it. So we're going to exponentiate it to 15. Exponent.
437 or 438.
Yeah, 15.
Like, I'm not saying that any.
You get 438 is what you get.
Okay.
And if we go, say, 15.4, which is more closer to what I'm going to get to, it's 514. What I'm saying right now is that 1 megabyte, when the Bitcoin Genesis block was mined in 2009, it's 500 megabytes today. A lot of people don't realize that. When you're looking at bandwidth, you get a similar statistic. And this is where people talk about scaling. Yes, you're going to have what's called a sigmoid curve. A sigmoid curve is where you sort of looks exponential, then it goes linear, and then it flattens out until it matures. But you're still going to continue having this exponential drop in the cost of storage. So in fact, your cost of storing that blockchain is going to go down with time, even though it's growing. And therein lies the fundamental issue. People get all so worried about things like, well, let's prune the chain. Quite for the fact that you can prune about 80 to 90% of Monero without destroying any transactions, by dealing with things such as proofs that are no longer required because the thing is so buried in the blockchain. You've already identified that. So the cost of storing the chain is not what's going to determine this. This is a technology. The evolution of technology continues, and there I say, so you got like 500 times, it's a ballpark figure, since the start of the Bitcoin blockchain. And yet people in the Bitcoin community, they still argue that you can't increase it over 1 megabyte. Well, effectively 2 megabytes with the you stake counting part of the blocks, which is what they're doing with Segwit. So what you've got is this unscalability. Of course, the reason they can't increase the blocks is because of these following block rewards and the fees, and this is the problem.
But ArticMine, I'm just saying that the nature of the animal are n vectors that sooner or later we are doing this for our grandkids. This is going to be around. Nakamoto consensus is hopefully going to be quantum proof and around for millennia. Like, right. I'm saying that the nature of the animal says that these systems engineers, like I heard Alden and Saylor and another guy, they cannot claim that it is digital property because they will have to rotate it to their grandkids, because we can expect the technology to improve, but you will always have to, you cannot save one, store 1 bit with 0 bits. You know, the nature of the animal is not going to change. So you will have to rotate, you will have to do transactions forward. That's my point.
Well, what you're saying is that
like now the project is already the project of Monero is already running, and it would be immoral to say let's cut off the last 10 years because these outputs are all used, but because of the person that went to the Amazonas, for example, and has one output of 2015, and now he comes back from his retreat and wants to cash in all his gains. So that cannot be done with Monero. But the nature of the animal is just like that, you know. And
I'm going to have to excuse me just for a second. I'll be back. So I'm going to just stop the camera here for a moment.
Well, I would also point out, though, Slave Blocker, that you can still use the old outputs while adding to a new type of output. Like you don't have to necessarily get rid of the old ones to make new. So, for example, we're switching now to new addresses without making the old addresses irrelevant. We're switching now to different types of wallets.
It's a DAG, and you use one output once. What's going on? You use one output once in the chain as input, and then you can use it furthermore as a decoy. But that's it. You cannot tell that it's been used, but you have used it. And if you spend from that input again, the amount has nothing to do with it. You will sign and you will have double spend because of the key image. It's linkable, so it's noticeable. So you cannot use one output twice as input. That doesn't work in Monero.
Okay,
no, but I'm saying you can add an additional range to the outputs. You can keep going infinitely. It's because just look at the changeover to Seraphis right now. You don't have to get rid of the old. And the other thing is think about the economics of it as well. Yeah, you could add a shitcoin fork, as you're saying, but I don't actually see that as being necessary for even.
I'm not saying that anyone is doing anything wrong. I'm just claiming that the nature of the animal speaks against digital property as like. Property in Manhattan. Property in Manhattan will be here for 500 years or 1,000. The Genesis block won't. If you're doing 50K transactions per second, you're just gonna. I don't know. I should have written this down, but I hope I explained myself well.
I think I see what he's saying.
I'm not totally following it. Yeah. See if you could summarize it.
I'm pretty certain I understand. So he's saying that each output can only be spent once. So after a certain time, it would be safe to very easily assume that you could drop those outputs. So maybe say after 100 years, you could drop the Genesis block from 2014 and 2114 without losing anybody's Monero. Or you could drop the 2015 blocks in 2125 without dropping anybody's Monero, because everybody would have spent those outputs by then. Or they're going to be dead. One of the two.
Exactly. The problem is that like those kinds of solutions are always they're like statistical in nature. They're not. It's not a best practice kind of solution. It's not a mathematically and code correct kind of solution.
No,
it's
not
to mention that same wallet maybe passed.
Your dad didn't pass down your paper wallet, right? Like maybe your dad passed down the paper wallet to their kid, and it's been 80 years. Like that's possible. And so to use non-technically, it's a non-technically correct solution, and Monero is all about implementing technically correct solutions.
Yeah.
Yes, you could do it. The point is that it is ever changing. So there is no. It would have to be with the consent of the user and with the ethos of the community to be done in such a way, and then you could do it. But now. The project is already running. That doesn't mean that it is doomed. We made lots of hard forks, but it would be immoral because of the Amazonas guy. That's my point.
The key to this concept would have to be that a person would have to spend in with a known key for the purposes of recycling the output, right? Like, but it would have to be transparent. It'd have to be like part of the build. And then the thing is now you've created a mechanism by which double spending is theoretically possible.
No, it is not possible because you can only spend from the inputs on chain that are visible. The sociological aspect, which would be fun, which would be in the meeting with the Monerians, the tail trimming. There is a tradition here, I thought about this, where the ladies cut the ties from the gents. So the ladies would have ties like tails, and we would cut the tails. It would be the tail trimming process. That's the joke part.
Here's another reason why you wouldn't do it. Like, it doesn't, if we're going to scale up to a very large volume of transactions 10 years from now, then within just a few years, all of those transactions that are happening on chain are going to completely overshadow any savings that you might get by cutting out the original transactions or the original outputs from 2014. Like, the space savings that you would get from that is truly minuscule in comparison to the size of the chain as it scales.
Well, that's exactly my point. And where you get into a real issue is that you're going to have a linear growth, pretty much, or a very small growth at that point, because you're now dealing with a mature technology as opposed to an emerging technology. And at the same time, you're seeing the increase in technology, so you will essentially get a minimal benefit. Now, there is one area where this is going to be interesting, and that is quantum computing. If there is a real threat that old outputs could be attacked through quantum computing, that you may force something like this to happen, or some kind of a model where you would have to lock those outputs. And it'll be
that's exactly what I was thinking about.
Yeah. So that's where I would be interested in.
No. The minimal benefit would be in relation to the time horizon, because there will not be block wars. There will be time horizon wars. That's my point.
Well, the issue is if you have to sort of quarantine a bunch of outputs, and I haven't yet thought of how you would do this, but if you have a group of outputs that can be forged because of quantum computing, then you have to quarantine them and essentially prevent that growth, that double spend from occurring in that group of outputs, even at the expense of those outputs. But so you would say if you're in this pool of unborrowable outputs, get out of the pool before because otherwise it could be double spent and attacked, and then your total you'd lose your group.
Well, that's the argument that the code that is running
but that's
the most optimal one.
Well, not necessarily the most optimal, but if there's a vulnerability, a quantum vulnerability or something like that, you could argue that case. But the space savings just is not there if you have the continuation in the growth of technology. You end up at a point where it's so minuscule. I mean, a good way to see this is try to syncing Bitcoin from scratch, and you'll see that the first part syncs really fast, and then it takes longer and longer and longer as you go into the chain. Simply because the original outputs are really a very small percentage of the total set of outputs in because of the growth of the transaction rate. So that's where you're getting into this idea. Pruning is one of those things that people love to do. Talk about the other thing about Monero to keep in mind is you can get rid of about 70% of a lot of the storage if you simply got rid of essentially proofs and that you no longer need because you're already proving those transactions, so you're willing to trust them because they're deep enough in the blockchain. So you don't have to actually keep a lot of this stuff. But I don't see a huge issue with this business of pruning just on the basis of size or just on the basis of storage cost. I mean, the social covenant disruption is simply not justified vis-a-vis the cost and savings of storage.
Yeah, to me, the real value in such a concept would be having at the ready a technical solution to perceived problems from the advancement of technology, like what you're saying with, I mean, even also like AI. I mean, there was so few Monero transactions back in the day that you might be able to use AI to reverse engineer who had what, especially when there was when you could have deliberate what was it, hidden spending amounts, right? So before, when you could figure out how much somebody had spent, and using AI to reverse engineer who had what outputs when,
Yeah, I mean, that's been done already. I mean, the traceability of Monero in its early days is much more common with Bitcoin than it has with, because of the big evolution of privacy. I mean, anything prior to 2017, you're going to have the traceability that's there. So the other issue with that, of course, is that its value diminishes with time, because it's privacy of something that happened 200 years ago doesn't have that big of a value anyway. So this is the other flip side of the whole issue.
In fact, even having that knowledge 200 years from now may add value to the chain. Like from a historical standpoint,
Yeah, exactly. It's yes.
You said that the full chain membership proof would be 3 kilobytes. That's 2 inputs, 2 outputs.
Yes, that's the latest I've heard.
As I see it right now, Monero does not have an UTXO set. So in Bitcoin we have the blockchain and we have the UTXO set. So we have even 2 problems. If we are starting to make dust transactions, the UTXO set will rise. Isn't it a fair assessment that if full chain membership proofs are successful, then we will have the same sort of thing like the chain of Monero, and then not a UTXO set, but a tree, and that tree could be affected by dust attacks? What's your opinion upon that?
Not well. I mean, the question of spam attacks in a privacy coin is, by its very nature, if you have a totally hidden UTXO, privacy-wise, the only way you can deal with a spam attack is by pricing it correctly. So you really have to deal with how do you price it, how you do pricing. That's the only thing you can do. There's nothing else you can do.
I can't see a situation in which a dust attack is very useful to any adversary just with the existence of tail emission alone.
I mean,
because the economics of the function of equilibrium that tail emission brings to the situation, like dust attacks, no matter how you would conduct them, are functionally useless as far as their attack on a network. Because, like, let's say you dusted out people with 3 pennies worth of Monero, like, why would they care? Like what exactly is the threat there?
The issue that you get in there is that it's going to cost you more money. Monero is one of those things that looks very, very attractive to attack until actually you get down to it. And this is the thing that really, there was this attack that went on for about 3 weeks, and there was some people argued it was a black ball attack or a blockchain surveillance company was involved behind it. And then it petered out. And it petered out because essentially the way the scaling and the way the fee structure of Monero is designed to actually wear out the attack. It doesn't prevent the attack. It just frustrates them and wears them out till they give up in frustration. Because once they get down to it, they realize they're getting nowhere. Compare that what happened in Zcash, where the attack was way bigger and went on for 6 months. And the difference is how do you do your pricing?
And don't forget, it can be done again too. With the Zcash attack, like there's gonna be
there's no pricing control.
Yeah. So whereas with Monero, the utility of the initial attack is
it's
almost worthless, but then you can't build on it later either.
Well, this is the thing, because that's what it's designed to do. Is if you try to do a flood XMR attack, or what's called a black ball attack, as some people are called it, what happens is if you stop doing the attack, you have to start from all over again. That's by design.
And you've added value to the network, by the way, because you just put in a whole bunch of pen testing and a whole bunch of free research, and everybody can go through. It's like, so realistically, every attack on Monero, it's so resilient, or at least every attack that's happened so far, it's so resilient that it actually grows and learns from the attack as a chain and as a community.
And if nothing else, the miners benefit just because you're still paying transaction fees. So
there's hardly any, and it's hardly any benefit to the miners.
I actually lost a little bit on it, but but the thing is, if they would have kept going, I would have started to gain, right? And
because actually what happens is, as you increase the block size, if it kept going long enough, you trigger the long-term median, and that causes a drop in fees. So the thing about Monero's fee structure is that the cost of the attack goes up, but the actual fee and reward goes down. And this is the thing that people don't realize, is because the reason the fee and reward either stays constant or actually goes down, because now it takes more transactions to pay this to scale the same amount of penalty. So it's a big misconception to think that you can extrapolate from Bitcoin to Monero. This you cannot. And in fact, if you look at the whole structure of anti-spam in Monero, it's totally dependent on the tail emission. You take that out of the equation, the whole thing collapses. The whole security model of Monero collapses if you take out the tail emission. Not just a 51% attack, but also your anti-spam. The whole scaling model of Monero is totally dependent on that tail emission. This is why I'm so bearish on Bitcoin, because I realized as I was studying this stuff in Monero how bad it is what Bitcoin's situation is. And so you look at these so-called, I think it's a shot of the attack was posted in there. It's a historical chart that shows the peak, and then there was a little echo, and then it kind of dropped down, and it's kind of at a slightly higher level than before the whole thing started, before the Binance delisting. And the argument there, of course, is that it's due to some shift away from the centralized to decentralized exchanges, which I believe is part of what happened.
You know what? One of the things we never actually dove into since it happened.
Yeah.
So overall, will you bring the chart back up, please? Overall, transaction counts from organic sources, which is one of the things that we were theorizing, not necessarily in whole, but in part, right? Because that was also around the time of all of these delistings and stuff.
Well, the Binance delisting.
Yeah. So the overall organic transactions went up, and then we had this whole spike thing that happened, and then it took a dip before, if you notice, now we've been averaging 40K.
Which is higher than the historical, which is higher than the historical transaction rate. This is the thing that I was saying about Monero transactions. So, is that the organic grew. Okay, there we go.
Yeah, because the organic was at like 25K, and now it's settling in right around 35. I think it might get down as far as 30, but I don't think it's going to get very much lower than that.
Okay, let's get rid of Bitcoin here.
Well, if you do a statistical average omitting the outlier, I mean, it's really averaging like 40K for the last month.
About 3 years. Okay, so what we've seen here is it's actually above the before delisting peak. The peak at the beginning of end of December is actually organic, and that's the what you would expect if there's a retail usage, and that retail usage is just before the Christmas season, by the way. A lot of people sort of question what that is, but that's what I suspect that is. And what it's telling you is that retail usage is actually a fairly small percentage of the total. But yeah, we are at a much higher level right now than we were before all this happened. So it's more like 40K. if you actually go the old time in a log, if you look at the log transition rate going back to 2014, there's been a period of time where it's been flat, literally from about 2021 all the way till 2024, 3 years. Hasn't really moved a lot. And now we may start to see some upside movement.
Yeah, and this is kind of the underlying premise of like a lot of people, you know, and there is the idea of
you got it up on there now,
yeah, building precedent and all this other stuff with the oligarchocrats or whatever you want to call them. But the other thing is, I think the reason they trim around the edges and they fight like hell to never say the M word, as Doug likes to say now, is because a direct attack is impossible and may backfire like massively. But if you can continue the fear model around organic adoption long enough to corral people into shit coins like Bitcoin, right?
Well, I mean, I don't know how they're going to. What we have right now in Bitcoin is essentially a speculative Ponzi scheme. I hate to say it, but that's what it is. You know, I take the extreme position from the cypherpunk position, but I also agree with the banker's position that Bitcoin is basically doesn't have a purpose, and that's what we have here. This is why I remain very, very bearish on Bitcoin, and just because of what I see, and my personal feelings is that we may see actually an overall drop in crypto, with Monero sort of being less impacted among others. And if you just take a look, every time Bitcoin goes down, the coin market cap ranking of Monero goes up. Just take a look at that.
Yeah, that's actually something we've looked at before on the price report. Is you can do a correlation analysis, and we've done it where like the XMR BTC ratio is anti-correlated with the total crypto market cap. So like it's very clear that that Monero, like we can prove it, Monero does better during bear markets when all the hype and all the leverage and all the printed money isn't flowing into the shitcoin casino. You see that Monero actually has a much better like baseline of organic support.
But Bawdy, the market has spoken, right?
Like, yeah, the market spoke all right. 0.000001 BTC equals like 33 BTC. Like, the rare sat from the first block after the halving sold for 33.3 BTC. So that's literally one sat, like 0.000001 BTC equals 33.
It's so ridiculous because it's like the market is spoken when number go up, but the market certainly didn't speak when the market cap of Monero goes up in a bear market, which is actually the market speaking, right? Because people are still demanding and using it in a bear market, meaning that it's doing what they say that their coin does, only they only do that in a bull market, but it's totally a reserve asset and it's totally digital gold, except for it's anti-correlated to, you know.
Well, I don't accept the idea of digital gold. I don't accept the store of value of Bitcoin.
Yeah, that's the thing. Like they can't keep their story straight, right? It's like they just change whatever they want to talk about based on what.
We really need to get Peter Schiff on Monerotopia. That would be.
You know, I mean, the argument that I hear from people like Peter Schiff, from people like Warren Buffett, all these anti-crypto guys, they look at Bitcoin, they see this basically Ponzi casino, and they freak and they say the whole Bitcoin, the whole crypto economy is that, so to stay away from. And who could blame them? I mean, you know, you're going to dig down to number 47 or something, or 48, and figure out that would actually make sense?
Well, I would point out that Peter Schiff has actually taken a bullish stance on both blockchain and Hyperledger. And I think that he doesn't realize that a transactional gold-pegged crypto literally already exists, and it's called Monero. I think that that's part of the reason. And because the thing is he's advocating right now for the idea of a blockchain that's pegged to gold. In fact, he even dumped a bunch of money in trying to make it happen. But what he doesn't realize is right now, one of the most common things that is used in the Monero space is trading Monero for gold backs. And I would have to say about 95% of all of the Monero related transactions I do are people getting in and out of Monero with gold, right? And I think that over time, as the liquidity value of dollars go down, you're going to see a spike in the transfer of wealth in Monero, followed by entering and exiting as a means of on-ramp with gold, right? So the thing is it already exists in the way that Peter Schiff is advocating in the form of Monero. He just doesn't know it. So because he's literally on his shows, and when he talks to people in the crypto space, he always says, I do believe in the underlying technology. It's the cryptos themselves that I don't advocate for. And ironically enough, he is advocating for Monero. He just doesn't know it because of the fact that it is currently pegged to gold in many niche markets, like the Alaskan market.
There was something that I wanted to mention on the price report that I kind of missed about the store of value argument. So someone on Twitter asked me, and I think it was a genuine question. They said, how safe is it to store wealth in Monero? And in some ways, like, as long as it's asked genuinely, I think it is a genuine, legit question. No one wants to go broke out of principle. So, I kind of started by telling him that I think we all know that in large part, probably the majority of crypto is just like basically shitcoin casinos, wash trading and fraud, etc. Maximalists recognize that. We recognize that. And even the people like participating in a lot of that degeneracy would recognize that. So the reality is that we have neither an honest nor a rational market. But that said, XMR actually does have real underlying usage and demand. We've weathered the fractional reserve price attacks. We're surviving and thriving despite all of these delistings that are happening. And Monero even replaced Bitcoin in darknet markets, which is, that was the original proving grounds of Bitcoin. So that's no small feat to replace the largest #1 first cryptocurrency that existed in the place where it first proved itself resilient. Right, we can't just brush that aside and be like, drugs are bad, okay? Right, like that's not a good response.
And it did it with low liquidity, right? Yeah. Bitcoin has all of this liquidity. Monero has less of a on-off ramp utility.
So the point that I want to wrap up here with this is that, people asking about, is Monero a store of value? Should I, is it safe to store my wealth in there? Despite all this background and all these problems, the simple fact is that due to the threats we face, I can't promise you that XMR is going to be a top performer anytime soon. But I can tell you that Monero's price is built on organic usage, not hype.
Well, my argument is that you're better off holding a mix of XMR and a major fiat, such as CAD or Euro or USD or whatever, than you are holding Bitcoin, which is kind of the two extremes approach. You hedge one against the other. If you want to hedge your crypto exposure, look at the banking system. If you had to hedge your banking exposure, take a real crypto that actually behaves like a cypherpunk currency. So this is the sort of let's hedge both ends approach. The issue that I look at for example, if you look at the last major bull and bear cycle, around the turn of the century, you had the dot-com stock. So what happened, for example, if you compare AOL and Amazon? Well, in 1999, AOL had a much higher market capitalization than Amazon. And it was in the depths of the bear market that Amazon flipped AOL because it had the fundamental value that AOL didn't have. And my take is that if we see a flipping of Bitcoin by Monero, it'll happen in the bear market, not in the bull market. And it could happen at even a lower price than we are right now in Monero.
That's an argument I heard that, I didn't hear it just once. I heard it many times, is that the use case is not so important, and what is important is where what all people use. That's like saying that buses are better than Lambos because more people drive buses or go with buses.
But if you're going to,
if Monero overtakes Bitcoin in transaction volumes and in the hash rate, then there will be like blocks of lead in each main city, and that will be a huge Monero node with lots of CPUs and hyperlink fiber optic cables. There is no other way. Like, are we going to ask for permission, or are we going to stack CPUs and fiber optic cables? Thanks.
well, I mean, the reason why you have such centralization in Bitcoin mining is because of the hash algorithm is ASIC friendly, and Monero's is not. So that's the reason we have that. My argument is that markets. I'm a fundamental investor. This is the thing. I don't see investment on the basis of trend following. I see it on the basis of fundamentals. I kind of like Warren Buffett's approach. I just happen to pick an asset class he doesn't like. But the principle is essentially you have to look for fundamental value in an asset, and the utility value is there, and ultimately the market will come out to that reality. What we have with Bitcoin is a lot of things that don't add up. And that's what really bothers me about it. I mean, you got this falling block reward and it's going to be replaced by transaction fees when reality is not happening. This is going to be a decentralized network, but it's being more centralized than fiat. You got this massive valuation, but for what? I mean, this is what's going on with Bitcoin. And so you really got to ask some hard questions. I mean, why is Ethereum worth less than Bitcoin? Let's forget about Monero for a moment. Why is Ethereum worth? Fundamentally, it's got much more utility.
And in fact, I think that Bitcoin is used more on Ethereum than Bitcoin is used on Bitcoin, if I'm not mistaken.
So what's the point of it? Well, so what's the point of it? This is the question that I have with Bitcoin, because it's failed and it wasn't designed to do. And so you have a real disconnect from reality, and that's what really concerns me about it.
If you really want to see that in action at like a whole nother level, it's in the ossification movement. They have convinced themselves so deeply that it's so perfect that they're literally advocating for never changing the code again. Like, these people have gotten so delusional. It's like perplexing, because to say that you want to ossify Bitcoin to prevent it from changing because it is so perfect now. Meanwhile, the utility has completely crumbled in every conceivable way. It's just like they're so delusional. It's like the story about, Warren Buffett likes to talk about the great investor who, once he heard shoe shiner pumping his stocks, he knew it was time to get out. These people have gotten so delusional about their crypto that they literally believe that because it's so amazing, it needs to ossify so it can go to the moon. Like, it's gonna hyper Bitcoinization will finally happen once we all agree that nothing should ever change ever again.
To be fair, I would like to give a little bit of credit to the Bitcoiners that used to be ossifiers. If we talked to them 2 years ago, they were hardcore ossifiers. They'd be like, okay, maybe we have to fork to fix the Linux time bug, or the Unix time bug. But they were hardcore ossifiers. And then when shit started breaking and they realized that that non-monetary use cases were starting to overwhelm their chain, that's when we started to hear them, say, well, maybe we do need to make some more changes. So there's a big division now in Bitcoin of people that don't want to ossify. I still think that the people that are willing to make changes are not willing to go nearly far enough. I don't think that they're going to be able to fix the problems, even with the stuff they want to do. So that's like a technical argument, but it's better. We can at least we can like reach out to some of them now. I'm seeing some of them start to drop that.
Is anybody there wanting to change the 21 million limit?
Yeah, exactly. They're not willing.
That's
to go
where
far
I'm.
enough.
If they're not willing to deal with that, they will not be able to solve the problem with Bitcoin.
You know, another thing you said, Alaska, was about Ethereum and Bitcoin usage on Ethereum. So I ran the numbers. There's 30 times more wrapped Bitcoin on Ethereum than there is in the Lightning Network. And then there's literally 200x more value locked in Ethereum layer 2s than in Bitcoin's Lightning Network.
Just imagine how like it's that's way more than even I thought, but it's just like, just imagine how fundamentally broken your whole thing is if it's like your primary competitor is literally like breaking their back carrying your value proposition.
Yeah. I haven't checked their volumes, but I'm almost certain that their layer 2 volumes in wrapped Bitcoin just vastly outstrip anything the Lightning Network does.
I mean, think about like just with the case that you've already laid out. I mean, it doesn't even matter. The volume part doesn't even matter anymore. Like they literally are depending on Ethereum for their very survival. If you're one of the poors, right?
Well,
like you could never trade your Bitcoin unless without Ethereum, trading Bitcoin is pretty much impossible for anybody who's less than a millionaire.
The other hilarious aspect of that is most Bitcoiners have been heavily positive USDT Tether, and Tether doesn't trade on Bitcoin. Like there is some tiny amount of integration of Tether onto Bitcoin that basically no one uses. It's used on Ethereum. It's used on Tron, on Sol, maybe even on AVAX, I think a little bit, but almost nobody uses Tether in any form whatsoever on Bitcoin. And it's hilarious because they've been huge Tether promoters over the years.
And what it reminds me of is the people who are like, you know, they talk about guns all day and they own none of them. They've never shot one, right? And they talk about like the value of guns for the purposes of like, oh, blah, 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 protect tyranny, blah, blah, blah. But it's like, well, go get one and practice with it, right? So Bitcoin's talking about how it's going to liberate humanity and all of this other stuff. And it's like, they don't even actually personally have custody of them in a lot of cases. But then on top of that, they don't even have enough where they have one transaction's worth of the bullets, right? That's like, I've stacked all of these stats, but I can't consolidate them into a self-custody wallet because I can't even meet the transaction fee. And it's like, dude, you could never deploy Bitcoin to 99% of the population of Africa right now. They don't make that much in a year.
No.
There are still use cases. The Navalny's funeral supposedly was paid with Bitcoin.
The Nostr wallets, like the Nostr client, like Lightning wallets, like Primal, for example, they suggest on Nostr that until you have 1 million sats in a Lightning wallet to keep it off chain in Lightning. 1 million sats. I don't know how much that is, but that's a lot.
I gotta figure out how to get rid of my Lightning that I got for that meal in Mexico City.
ArticMine, would you dare to predict a 51% attack on BTC and when that would happen?
Oh yeah, well, there is on that is agree on Christmas Day 2043, and that's the 200th anniversary of Charles Dickens' A Christmas Carol. And I would say that the optimal time to do that would be on Christmas Day, because you want to do it when the transaction level is the lowest. So the fee revenue is the lowest.
You know, one of the things that breaks my heart, I really hope somebody from the Bitcoin community is listening. Like, I believe I like to follow Bawdy's like just brutal comments. I'm sure he's noticed I basically stalk him on Twitter at this point because it's so funny sometimes. It's a great pick-me-up if you're not following Bawdy on Twitter. It's amazing. But in one of those comment threads, there was a woman who was talking about how, you know, my like nephew or something is having a birthday and I want to find a creative way to give him some Bitcoin. And I was just thinking to myself, so this person wants to find a way to give their nephew Bitcoin. And she was talking about something under the dust threshold limit at that very moment. So she's talking about doing like, you know, maybe $50 worth of Bitcoin where transactions were costing like $200 or something like that. And you just think to yourself, like, there are people who they wouldn't know what we know, right? They're, you know, they just like got high on some hopium, right? They don't know what we know, and they are trying to do God's work, right? Teach children about the fiat system and about freedom money and about self-custody and all that stuff. And they have no idea that they what they're trying to do is feeding these people into a trap. And some of these Bitcoiners, they have no idea how their tireless efforts on, you know, keeping this collapsing endeavor, this sinking ship afloat, is literally dragging down innocent people with them. And if they don't get off of their high horse and start fixing some of these problems, they are going to destroy lives. You know, people who are trying so hard to get out of the system and they don't know any better. They're feeding these people to Satan.
I disagree. I hope the Trojan horse goes, and the more it goes, the more Monerians have time to lay the groundworks.
Well, I mean, the argument is that Monero can stay in the out of the limelight and build and finish sort of getting to the point where it's good. Well, I mean, I would argue Monero is good enough right now, but getting to the point where we get some of the key hard folks, such as full trade membership proofs. I'm a bit biased towards some of the changes in scaling, but although they're all absolutely critical, but we're getting to the point where Monero is really starting to get to the point where the requirement for hard forks is going to really go down. The two big ones being FCMP and Seraphis, of course, that people are looking at. But
I would certainly like the Trojan horse method to not have to include innocent people losing tons of buying power, you know.
But what you're saying is
the war is going to happen anyway. So it's happening right now.
The issue that people are getting into Bitcoin right now are getting into real trouble. I mean, I can see that because you've lost the reason or rationale for it. And that's what I'm so worried about. I mean, and then, so I'm been a BTC bear for a long time, but I understand that it could maybe hit 100,000. Who knows? I mean, but I'm looking at the trend right now. I'm seeing this double top, and I'm saying, you know, is this thing going to go up or it's going to go down? But the fundamental issue with Bitcoin is that it is actually failed at what it was designed to do, and that's what's so really difficult. And then you add all this other stuff about privacy and about blockchain surveillance and about, but it's failed at its design thing. I mean, look at the country of El Salvador. So what are they going to do? Are they going to finally figure out that they picked the wrong chain? I mean, they had a legitimate use case, but how they figure out they picked the wrong chain?
They haven't yet.
You know,
they haven't figured it yet. Yeah, I know.
I was just looking at, I went over to Twitter to see if I could find some of the tweets that I was thinking about. But the first one that comes up, Bitcoin Vanguard. Do you think the U.S. will try to ban Bitcoin self-custody? It's like, you know, and more power to him. He's bringing it up or whatever. But it's like, don't you think he should have probably been thinking about this fucking 12 years ago? You know what I'm saying? Like, it's Monero had that conversation in 2015, right? Like, okay, how are we going to handle this situation? And now you got these, you know, laser-eyed Bitcoin maxis just starting to think like, what do we do if they ban self-custody? It's like, bro, a little late, man. Like,
by the way, I found out 1 million Satoshis is $630. So they're saying that you should not self-custody Bitcoin until you have at least $600 worth.
And this is Noster, the people trying to protect freedom of speech and the people trying like, what, like, dude, like, wake up, people. Like,
you shouldn't say, what kind of fees are they talking about?
so he's talking about the Lightning Network being used on Noster, right? So which not, I think, isn't Noster like Twitter for Fediverse people?
Yeah, Nostr is decentralized. It uses relays. You post to relays, but yes, it's basically Twitter.
Yeah, yes. I remember now another point. Sorry, I wanted to make it that it's already solved. So you have Fedimint, and then you have Lightning on top of Fedimint, and yeah, you have the Federation, which is trustless, of the Fedimint, which is on the layer 2 of Bitcoin, and that's the solution. And then everyone is happy. So that already exists, right? Is
Which
that the
still requires people to be mining Bitcoin
I'm getting too old for
layer
this.
1 blockchain.
I just want a simple layer 1 blockchain. I don't have to deal with this nonsense.
I'm with you, ArticMine. I'm even in the Arctic.
That's why I use Monero, because it's layer 1, and I can just simply open my Monero wallet, click an icon, paste an address, or scan a QR code, and hit send, and it sends.
But are you
cleans
sure you
around
don't
the
want
world in 20 minutes.
Are you sure you don't want to just trust that the Bitcoin blockchain remains secure somehow, some way, and then
Trust
you can
me,
use
bro.
your layer 7 transactions to be able to speak freely still?
No.
I mean, what could possibly go wrong?
No, I don't want to trust you, bro.
Guys, I'm gonna interrupt here. I just want to bring attention to Luke's proposal for full chain membership proofs. His proposal to develop has been fully funded. The second proposal, which is to pay for the auditing, things like that, that has not been fully funded yet. Pretty close. We hit 1,651 XMR. Fully funding would be 2,000, so we need less than 400 Monero more, and we're there. And full chain membership proofs will be fully funded. Amazing, amazing to see.
We pumped the price of Monero by $100, and he's funded well into the future.
Very, very nice.
Basically, I'm not surprised at all. But I'm kind of glad I don't have to deal with. I'm kind of glad I don't have to deal with 10K transaction sizes or like 3K transaction sizes. That makes me feel a bit more comfortable.
Guys, we were almost at 5 hours. I think this is a good time to stop the show.
To take a break here. I've got things to do. So
maybe an hour ago.
If you don't mind, for those of you still listening, if you're new to the space,
there's a lot of people.
You want to know how you can help. Consider purchasing yourself a Monero Nodo to increase the number of nodes in the network. It will even mine crypto for you. Not a lot though. Like, don't expect.
I wouldn't sell it on the crypto mining aspect.
On principle, but not for the money. You will be mining Monero if you'd like. But the other thing is, on behalf of Doug, I would like to remind you that Monerotopia is rapidly approaching, and your window to get an incredible deal on tickets. And I do not work for Doug. I have no stake in the game other than I'd love to meet you down there.
Except that he doesn't have virtual tickets up yet, so I can't buy them.
Well, that's because you need to get your ass down there. All right.
We much rather you attend in person for sure.
Shortwave, I will help you get down there if that's what you need. Okay. Just let me know what you need for help to get down. You need to be there. How you would even entertain the idea of not being there, Shortwave, is honestly disappointing, and I expect better of you. But anyway, like, if does not have their tickets, I can vouch. I know our friend ArticMine can vouch for the fact that it is a raging good time.
I'm hearing Roger Ver might be attending this year. We're very close to.
Oh wow, that'd be big.
Confirming that. He's highly interested. Been talking to him about it, or been talking through others to him about it.
Is he finally coming to the light?
Roger Ver's always been a Monero guy, if that's what you're referring to.
Yes.
Yeah, he is a Monero guy for sure.
He's always been a Monero
Well,
guy.
if he you know, I think Roger. I mean, I remember when I bought my RAID controller from Roger's Bitcoin store in 2013.
Oh wow!
And I built this 18 terabyte RAID array with the intention of using it for Bitcoin, and it's.
That's amazing. You bought a RAID controller from Roger Ver. That's awesome.
I bought 2 items.
Did you
for
know
that build.
that currently
I
sells
bought-
for 12 million Bitcoin?
I actually bought 2 things for that build. One of them was the RAID controller from Roger Ver's Bitcoin store. And the other thing that I bought was a floppy cable for 5.25-inch floppy diskettes in person with Bitcoin in Vancouver.
So I just want to make sure that everybody listening know it was an amazing time last year. I already know it's going to be better this year. And not only that, but I'll be there. So if you want to punch me in the face for all of my horrible takes, I don't believe in going to the police anyway. So you'll get away with it. And I'm a pretty thick dude, so I can handle it. So come on down. Tell me
No violence. No violence. Monerotopia is all love, man. You were there. It's all love.
See, Doug hasn't heard yet, but we'll be setting up a boxing ring, so there will be.
Oh yeah, sure. If people want to opt into violence, by all means, contractually, sure.
Monero MMA.
You heard it here, folks. Doug wants you to opt into violence.
All right, guys.
Okay, so I should basically log off here because it is getting.
We'll call it here. Amazing show.
Thanks.
Thank you, everybody, for participating. Arctic, thanks for hanging out with us the entire time. Greatly appreciate it.
Bye.
We do these shows every Saturday at 11 a.m. Eastern. See you guys next week.
Okay.
Peace.
See you.
Ciao. Adios.
Ciao.
Thank you for joining us on this week's Monerotopia episode. We stream live shows every Saturday at 11 a.m. Eastern. You can find and subscribe to our show on YouTube and Odyssey, or listen to the podcast on iTunes, Spotify, or Stitcher. Don't forget to follow us on Twitter or join us in the Monero